Did you miss me? Did you miss me? It's been a minute. It's been a minute since I've been live. Low-key, kind of want to start off with some little FX replay for a minute, and then we'll hop into like some lectures and stuff, and then we'll go from there. Yeah, it's been a minute. I kind of just want to just go straight draw on liquidity, just straight test the draw on liquidity. Let's do. Which one of these do I have? All these are recent. Oh, in the future, there's gonna be like no days to backtest because I've already backtested them all. That's the goal, you know. When you literally can't backtest a day anymore, but then you just go into the more recent data, and then you discover newer stuff that you have just found out, you know. Okay, let's go like, let's do 2016. Good year life right there. Or no, that's the election year. Let's do 2015. Let's do. I want to do March. Yeah, March 4th, March 3rd. To win. Let's go. It doesn't really matter. Name. New. 2015. 2015 on stream. There we go. I always put DXY in there, but I never use it. I don't really use DXY too much in my analysis. I'll use it occasionally, but oh, it looks like we just had a nice sell model there. I wanna backtest the Judah swing today. I wanna backtest the Judah swing. Here's a good example. This would be a double purge Judas, I would say. Where it takes sell side first, then buy side, then sell side. Alright, let me turn on some music for myself. Alright, so as you see, we purge down into sell side, take minor sell side, then we take buy side, then we go back to sell side. So I look here just want to backtest Judah swings. That's all I want to do. Hold up. I feel like I don't want to hop in that right now. I feel like it could though, but I ain't gonna do that on stream. I need this up here anyways. Okay. Just simply Judah swings here. This is 6. Judah swing. So here, ES draws up, doesn't take sell side first, but NQ does take sell side first. YM takes minor sell side first. Order flow is bearish. Sure. We'll say double purge Judas. Then there's the seek and destroy Judas, and then there's a retracement Judas. Those are my profiles I got, me personally. Sell side, buy side, and then sell side again. Above New York open, order flow is bearish. I also want to check news 2015. We're in March, right? March 3rd. Oh, Fed Chair Yellen speaking. It's NFP week 2. So I'm gonna put the news calendar in too. Fed Yellen. Wait, later in the day at 8:15 p.m. So nothing to really be concerned of. So no AM news. What day? What day is this? Tuesday. Okay, go to next day open. So whenever I do this, it lags a lot. I think it kind of does work best when I just do when I just skip 2 of the day. It's kind of annoying, but then I can also like kind of see order flow as it's printing. Okay, I think I kind of want to go to recent data because like this just isn't like as like there's so much more volume nowadays. Is this a so this would be like a buy stop Judas. Stop hunt Judas. Wow, YM doesn't even take those? Yeah, let's go to a more recent date. We're just looking for the Judas swing. And the reason for that is because NQ has just so much more volume nowadays that I want to see that data. Judas swing, backtest. All right, I would call this like a market opens here. Get a little candle up. So you're buy side, sell side, buy side, sell side. I would say more seek and destroy here. Seek and destroy. Judas. Buy side, sell side, buy side, sell side. Stopping out traders. Then we get a 950 macro here. Seek and destroy offers a nice 950 macro entry here. Offers a nice 950 macro. And then we just have seek and destroy again. Do we form SMT? Yeah, we form SMT at the lows. $9.16 low, do we take that on ES? The $9.16 low? No. So we initially create a SMT here at the lows, then push up. Then 10.05 high. There's no way we can take it on NQ. We form SMT with YM. So SMT, and probably SMT, honestly. Yeah. So this is like patty cake here. Okay, so we're reaching for buy side. Yo, what's good, Reno? So Powell speaks at 10. Stop button's already happened. I'll see if there's a standard deviation that lines up. Around negative 1.5 for manipulation. Expansion. -1 to -1.5 for manipulation. Is that the Tuesday high? Yeah. Then we come into this imbalance here. Daily imbalance there. I do want to look at possible new day opening gaps. Oh, it was open. NQ. This will be March, right? No. Because H expires in March. I'll get it one day. It was just a pure Judas there. That was before market open. We had a. It's 3/3. Round 8. So ES is closed below a new week opening gap. We can only have expand or I trust that we only have expansion at 9:30 straight up when we open within a new day opening app or new week opening app. Look at that. Respect. We can have a little stop on here though. There's a stop hunt there. Oh, we can for sure go to the 1 minute chart. So we actually get a retracement into this fair value gap. Come up, well, we have a stop hunt. We have a stop hunt. So at 9:30 we do come up and we do rebalance this. But then we come back down and then we take stops. Well, we don't have that on NQ, so we create S&T. S&T forms. SMT right there. Okay. And that daily for value gap. This got to be a low volume day. Oh, it's 8 p.m. Oh, I totally missed Friday. It's NFP Friday. Stop hunt already occurred. Hold on, I want to compare ES and NQ a little bit better. Where's ES at? Looks like ES took all, like... I guess they both took this high, and then ES rebalanced this. Yeah. Then we come up here, we have a Judah swing. So stop hunt Judas. I do want to see if there's a new day opening up there. Constant encroachment. So in a D premium, ES opens right here. SMT forms. So that stop hunt, well, it's kind of like smart money reversal, I guess. Stop hunt, Judas, and a premium. Three seven. Yes. Seek and destroy it again. Which that provides a good 950 macro. We have sell side, buy side, sell side, buy side, sell side. Wow. We form an SMT here. Then SMT here. Initial SMT. And then the real SMT. Kind of the same thing. We kind of have seek and destroy here. We'll say retracement Judas. The rim. Good, I'm baby. So we had a little retracement and a Judas swing there. An overall bias and narrative. We just rebalanced that. Looking like we want to see new highs. Wow, we leave a nice original consolidation here. Starts sell side delivery, SMT, buy side delivery, sell side delivery. The 9:30 candle changes state delivery. Loki, I think I can just do this on TradingView. It does not. That's why I kind of like That's why I like to use TradingView sometimes. I think they need to add it, but I feel like it's a lot harder to do than just that. This is a classic Judas. Stop. Judas. Right at that New Day opening gap. Perfect delivery. Gorgeous. And then we close below. Well, we close below that. Use that as real resistance. Use this as support. Use this as real resistance. This place. Never use anything. Use this as support. We're showing wicks through it. Then we come lower. The body shows support here. The body show real support there. Come back up. Retrace. Oh, what a nice day. Another stop hunt, Judas. Right to a New Day opening gap. Is that the same one we delivered to? No. We have a stop rate, Judas. Like, look at this though. New Day opening gap. Come down. Fall short of that. New Day opening gap. Right to New Week opening gap. I would trade ICT. Wow. Stop hunt. Dude, we have to have SMT there. So March 1st. It's March 1st. Yeah, right now I'm back to seeing Judas swings. ES so much more bullish here. Come up and then we reaccumulate within that. Iman exposed ICT. I do not care. I think he just used his name for views. So we have low resist liquidity. Close below that, rebalance that infish. Oh, look at that, off the breaker too. He has proof as well. I still do not care, honestly. I feel like that's just like, I've seen that video before, but it's just like, I don't know. Like, if you actually watch ICT, you know that he's not a scammer. He's not a fraud. He's an actual mentor that wants to see you succeed. But the people that just assume that just because they watched one Iman video and then they haven't watched ICT himself, just get misinformation. But I would say just form your own opinion. I'll form my own opinion. Yo, what's good? What's good? How you doing? I mean, look at that imbalance right there with that breaker. I want to see yes. If it's in that new day opening gap, that's crazy. Or concentrate with this gap. I mean, bro, that's just crazy. That's just crazy. I don't care what anyone says. The fact that you have the possibility to forecast that being the actual high, I would say those concepts work. I trade ES and NQ. Hey, can you tell me how to add news as you did? You can only do it. You can't do it on FX replay. Right now, I'm just on TradingView, but there's an indicator called news. It's by 2 degrees, and it's a really good indicator. And it pulls it up over here on the right side. It's by 2 degrees. Look where we put low session right there. Or just like I'm gonna turn low there. Have a 950 macro trade, short. This low right here within that new day opening gap. Just a little 130. I was at 3/4. I don't. That's the one thing I don't like. Trading View gotta fix that. When like whenever you're backtest and like switches the time frame where like it like messes you up where you're at. Trading View has got to fix that. Classic Judas here. I trade out ES and NQ. If you're talking about me, it's NFP day. Notice how this is like a two-stage event. So at NFP, we come down and stop these guys out, and then we come up to new week opening gap into this imbalance here. And then at 9:30, we open within this new day opening gap, and then we expand lower. Fair value gap in, fair value gap out is bounce price range, and then we refer where to that breaker right there. Boom. And we get explosiveness to this low resistance liquidity, and to this low right here, and to new day opening gap. New day opening gap, we get change state delivery. We come back lower. Order block gets respected perfectly there. Displacement, and then we get sent higher here. But 9:30 did not manipulate because we already manipulated into where we needed to, and we have low resistance liquidity, and we're within a deep premium. We're well above true day open. Generate low resistance liquidity here within a new week opening gap. I want to see these lows. That's not even based off the higher time frame. Yep. If you get a Judas swing lower, just go higher. Double purge. Where's the low resistance liquidity on market open? Right there. Let's see. Overall structure, let's zoom out. We're rebalancing into this daily inefficiency. All right, we're in a deep premium here. But yeah, we still distribute. ES has got to be within a new day opening gap here. Let's look at that though. Low, constant encroachment perfectly. Constant encroachment. Poof. What day is that? It's Tuesday, I believe. It's the 12th, I think. Oh, I think it's the 10th. Tuesday the 9th. Oh, it's way back here. Kind of that top end of that. Closed above it. All right, I'm gonna backtest these for like a few more days, and then I'm gonna watch a lecture. So we had 9:30 expansion. ES was right above a new week opening gap there, and also market structure just bullish. We are in a pretty deep premium though. Oh, and look at this. We actually are in a new day opening gap here. It just doesn't show on the 5-minute. Look at that. We'll only have, or I've noticed that we have 9:30 expansion more often than not when we're already within a new day opening gap. That's just what I've been backtesting. That's what I found. Those are the conclusions that I've come to, or I'm sorry to come to. When did you start trading? About like a year and a half, maybe. I don't know. Senior year of high school, and I graduated. I graduated a whole year ago. So I've been out of college, or I've been out of high school for a whole year. So I would say coming on about like it's not that doesn't feel right. Like 2 years of knowing about trading though. 2 years of knowing about trading, but I haven't like taken it serious that whole time. So I would say you only start your starting date is when you start taking it seriously, and that was kind of when I created this YouTube channel. Is when I started taking it seriously, and I've continued to make it a little bit more serious. I've continued to be a little bit more serious with it. Yeah, so it's always crazy. Like, man, I've really been doing it for like because like I feel like time has just been flying by for me, honestly, but also not at the same time. All right, 8:30 opened. We just had a big expansion here. Higher time frame. Looks bullish here. I would expect to see more expansion. We're talking market open. I want to see this and then expansion. Kind of a lackluster day. Pretty lackluster. Alright, so we're still bullish. We're pricing in a premium though before market opens. Oh wait, market already. I was waiting for 8:30 divider. But yeah, look how we use that new week opening gap. Market just opened. Right within this new day opening gap. I think we form low day here. I want to see expansion. I want to see that imbalance. Off of the new week opening gap. Okay, let's roll over. March 15th. I've already been on this contract. Am I even like, is there even data here? Okay. So April, like, I'll do this. Okay, so right now we're kind of consolidating here. We just had a stop on here, so I would expect to see maybe these highs. We also have this imbalance above market price that looks good. We have balanced price range here. We're now closing above that, so I would want to see higher prices here. Overall, I would like to see an SMT, but I'm not going to pull up ES. We're just going to... Oh, market's opened. We're in the premium end of that new week opening gap. I want to see at least this imbalance here, like around market open. If we stay below this by market open. We actually ended up manipulating these lows here. And then distributing. Wow, look at that. $9.30 expansion right off constant encroachment. And we're heading to this new week opening gap. We could possibly have like a reversal here. What was that, like a half day? Yeah, I think we want to seek lower price. I think we want these lows. We are above the constant of new week opening gap, so. $9.30 constant encroachment expansion. We're in an imbalance here on the 4 hour. I would hold probably a bullish view. I also don't like I'm just looking at new day opening gaps. Our 8.30 respect the current one perfectly. I want to see these lows. It's got to be an SMT there. There's no way. We priced right to that though. Look at that. Why don't you trade gold? It's too manipulated for me. It's too manipulated for me. Plus I never tried. Plus I live in the US. Plus I like futures. Plus futures make sense to me. Plus futures I understand. Plus futures is all I ever would want or need. Alright, we're gonna watch some of these lectures and we'll go from there.
going to run inside of dealing ranges, and the whole market.
This is where we ended stream last night. How long ago was I live? Yesterday was a. It hasn't uploaded yet. Do you think it is gonna upload? I was live for a minute yesterday. It's insane. That was crazy.
Market moves from dealing range to dealing range to dealing range. And just like price, the dealing range structure is also fractal. Essentially, the dealing range is the structure of the markets, and it is a canvas for PD arrays and candlesticks to print. DRT levels are true structural support and resistance in the market. It allows us to
DRT.
categorize the markets into premium and discount ranges, and it also allows us to mathematically calculate how high or low a buy or sell program will be permitted to move. Dealing are true structural support and resistance in the market. It allows us to categorize the markets into premium and discount ranges. And it also allows us to mathematically calculate how high or low a buy or sell program.
Oh, it's a 37-minute. But your consistency is crazy. Appreciate it. I mean, Loki. You ever activated? I haven't posted activated in a while, just because I came to realize that like I ain't trying to like get on there and sound like a motivational speaker. I don't know. I thought it was kind of corny, kind of looking at it. But I'm not gonna delete any of those videos because it's my journey, and what one thing I envisioned for myself might not be the next thing that actually happened to me.
It allows us to categorize the markets into premium and discount ranges, and it also allows us to mathematically calculate how high or low a buy or sell program will be permitted to move. Dealing range theory, or DRT, is the glue that holds all of ICT concepts together. When you get to a good enough level with ICT, you will understand that it's the final piece to the jigsaw. Again, this isn't renaming, rebranding anything. This is pure ICT. And it's meant to help remove that fog where you're questioning, what order block do I pick? What fair value gap do I pick? And I absolutely understand that. I was at that stage for many years. When I really understood dealing range theory, that's what unlocked everything. And you're not going to be able to get it in just one video or me speaking about it. It's going to require you to go into your own charts, backtest and forward test, and see how price is reacting at these levels, and look for algorithmic signatures in price that are revolving around the DRT levels. There's going to be this blend of confluence of key levels where time and price aligns, and how DRT gives the structure of the market. Anyway, let's get into today's teaching. I hope you can hear the audio correctly. I'm currently not in my office at the minute, and I'm away on business. So I've got a new microphone, and been playing around with the settings. I just hope it's clear enough for you to hear me. When you look at this chart in front of you, the two reference points that we want to focus on is this high, which ran the buy side liquidity above this swing high, and this low, which ran the equal lows, or the sell side liquidity, below these relative equal lows down here. Now, if you notice, this high has a lower high to the left, a swing high, and it has a lower swing high to the right, making this a long-term high. Again, this has already been explained in the Advanced Market Maker Model course, but when we're looking at institutional swing points, we can categorize from short-term highs, intermediate-term highs, and long-term highs. The longer the term, the more liquidity is going to be resting at those levels, because this is where institutions are looking at, right? Once we have identified the highest high in our dealing range and the lowest low in our dealing range, we can then grade the entire range into our DRT levels. Again, if you want to look back at episode 1 for reference, since I already explained it all in there, but there's going to be obviously an element of repetition, because this is how we learn and this is how we train our eyes, right? So I did this study on the 2 monthly time frame, if you recall, back in episode 1. The same logic and the same principles I'm going to apply on this daily time frame. So already you can see that we have been consolidating inside of the lower half of...
I'm gonna try to do my own analysis on this real quick. Even though I've already seen this before, it's like my second time watching this, but I'm sure there's probably gonna be something that I still don't understand here. So he's talking about. Oh no, he's talking about this whole. Yeah, so we're in Oh, he's talking about this whole fractal. We're in discount of it, and we've just been consolidating here. Wait, which one is he talking about? Yeah, he's talking about that whole...
the dealing range, right? So we've been consolidating inside of a discount relative to the dealing range high and the dealing range low. That's the first observation point we can see, and I've got a lot of data on this chart, right? This is going back to September 2023. One thing that I notice with a lot of my students is they're too zoomed in, right? You want to zoom out, get as much...
What's good, J-Muff? Zoom out.
detail as you can so that you can see the bigger picture, right? You can see the overall parent dealing range. This is how it will give you your reference points. We know that we're in a longer term consolidation inside of a discount relative to the parent dealing range. You can see how we haven't closed here above the equilibrium price point. Note all the consolidation around the lower 25 DRT level. Note this fair value gap over here. It's going to play a pivotal role, and price is going to be consolidating around this fair value gap, and it will have a role in the future. And this brings me on to a question: how do I know when a fair value gap is going to be used again? Well, it depends on, number one, what type of fair value gap there are. There are different classifications of gaps, and again, this has all been explained in the Advanced Market Maker Model course. There are going to be certain key fair value gaps that are going to be utilized by the algorithm, in some case many months later. Of course, again, this has all been explained in the Advanced Market Maker Model course. There are going to be certain key fair value gaps that are going to be utilized by the algorithm, in some case many months later. Of course, it's relative to time frame, but where these gaps form inside of the dealing range is going to give you a clue. Now, Some gaps can be used in the same way many months later. Of course, it's relative to time frame, but where these gaps form inside of the dealing range is going to give you a clue. Now,
Where these gaps form.
some gaps can be used in the same way as we would use the opening price of a session or a candle, for example. I'll get into a little bit more detail on that at some point, but for now, I'm gonna dim these.
So he's saying it could be used as premium in discount itself. So right here we're in a discount, premium, discount, premium, discount. Well, I mean, in this dealing range we are in premium discount, so I mean it's kind of around 50%.
Same way as we would use the opening price of a session or a candle, for example. I'll get into a
Opening price of
side of the dealing range is going to give you a clue. Now, some gaps can be used in the same way as we would use the opening price of a session or a candle, for example. I'll get into a little bit more detail on that at some point, but for now, I'm going to dim these DRT levels just to keep them on the charts, but just to make things a little bit more tidy, right? What other observations can you see here? Well, we've already discussed what
taking sell side, come up, taking short term buy side. Failed to rebalance here, so we left an imbalance above market, but we respected the equilibrium. Look at that. Look at equilibrium. Then it came lower, back down to a deep discount. To these order blocks come up, change state delivery, fair value gap, boom, come back down to these order blocks here, boom, just placing up to taking short term buy side. Now we're coming back down, and now we're kind of just within this fractal here, to where we're at around this area in price right now. I don't know. I think we're consolidating. We could come back to this level here at 25%. There's also a weekly imbalance here that we have that's not being shown that we could come back into and then seek buy side, but I don't know. We're just in a consolidation, so it's really hard to tell.
one of these here is the equal lows. This is a major sell side liquidity pool. Number one, because it being on the daily time frame. Number two, because this is a double bottom. So what are retail going to look at here? This is support, right? This is a trap for retail. They will create equal lows to build up sell side liquidity below those lows, and then they will go on to attack it. Smart money were selling up here, they were selling over here, they were selling here, and they were selling here. And to cover those shorts, they're going to be buying back the sell stops below these relative equal lows and accumulating long positions down. Here, right? So they've bought from the sellers and then they've sold back to the buyers above these highs, these highs, these highs. And if you recall in the first episode, one of the parameters that the algorithm looks to do is reprice back to where? Equilibrium, right? In the lower quadrant, so from the 25% DRT down to the 0 level, what can you see? We have these consecutive down close candles. Look how quickly it's running. It's all being jagged back and forth because this is accumulation of liquidity below the market and above the market. Retail will see this trend line forming, and then they quickly take the market lower. You can see how we've got all of these gaps here. Why are they taking price down there in such a manner? Because they don't want anybody to get out, right? So people who have their stops below these lows, they don't want to drift down there slowly and give them time to get out of their positions. They're going to really run and attack those positions. This run lower, sweeping all this sell side liquidity, all these down close candles are creating what?
An order block.
An order block, right? More specifically, this is a bullish order block. Now we can grade an order block just as we can grade a fair value gap and just as how we can grade a dealing range. An order block will be made up of one big down close candle on a higher time frame, and every candle is a range in itself. Now every candle isn't a dealing
Candle range theory. I've never looked into that, honestly.
range. There are specific things required for a dealing range, but every candle can have its own range with its own high, low, open and close. If we grade this whole candle into 4 equal quadrants, we can get the grades of the order block. Notice how in the lower quadrant, where we have this fair value gap, we touched it there and we touch it there. Also note with this candle that we didn't close back below the equal lows to the left. And then we displace higher back through the midpoint of this order block. Also note where we have this gap forming inside of that order block, and then price pushes higher. So this leaves us with these relative equal highs up here in the form of a major buy side liquidity pool. And we also have the sell side liquidity below this swing low as a major sell side liquidity pool. In between the major buy side and major sell side, we have shorter term highs and lows where we're going to have minor buy side and sell side liquidity, right? So above this high, we'd have minor buy side, and below this low, we'd have minor sell side. Because the dealing range high to the dealing range low is where we are going to find our major buy side and our major sell side liquidity pools. That is also true for the parent dealing range here. The major buy side liquidity pool above this high is going to house more liquidity than this, and the major sell side liquidity pool below this low is going to house more sell side liquidity than this. When we run the opposite ends of a dealing range, that is crucial as an algorithmic signature. When you're looking for your high probability turtle soups, you're waiting not to take a previous candle, you're waiting to take a previous dealing range, and then the buyer or sell programs kick in. I'm going to get into more detail about it all, but what you're going to find is there are many, many, many levels to this, right? I'm going to try my best to keep it as simple as I can and not go off on a tangent, but I do respect your time and I'm trying my best to pack in as much value as I can here. So anyway, let's times. You're waiting to take a previous dealing range and then the buy or sell programs kick in. I'm going to get into more detail about it all, but what you're going to find is there are many, many, many levels to this, right? I'm going to try my best to keep it as simple as I can and not go off on a tangent, but I do respect your time and I'm trying my best to pack in as much value as I can here. So anyway, let's keep it moving. Now, what other point of interest would I be interested in inside of this dealing range? Now, if you followed me for a while, you know that there are only two things that the algorithm is going to reprice for, is liquidity or inefficiencies, right? Since we are in a discount relative to the dealing range, I'm looking for the algorithm to reprice above equilibrium into a premium, and I'm looking to see if I can see any liquidity or inefficiencies inside of a
Since we're in a discount.
premium relative to this dealing range. I can see this sell side imbalance over here, where we've only had price offer one-sided delivery, right? Sell side. So this sell side imbalance sits above these relative equal highs, which sits just below the 50% DRT level or our equilibrium price point. So I know that this is a very logical area for the algorithm to reprice to. Now, does that mean that's going to happen straight away? As traders, we are speculators, right? In a way, we're playing a detective to understand the movement of price and forecast the movement of price. This theory of not being able to time the market, not being able to predict where the market is going to go, that is taught by people who have no idea what they're talking about, right? Our job as speculators is to predict market price. This is how we make money. If you can't predict where the market is going, you're gambling, right? The caveat is you're not going to know 100% for certain that the market is going to play out to your expectations. You have an expectation. Predict where the market is going, you're gambling, right? The caveat is you're not going to know 100%.
Hey, appreciate it, bro.
For certain that the market is going to play out to your expectations. You have an expectation and you stick to that expectation. That's going to be your bias, and you're going to form that bias. By understanding what is the market reaching. You keep that bias until you are proven otherwise. And there may be something in the market that comes up and trips you and says, well, this was a level that I was looking to hold as support or resistance and it didn't do it. And then you have to sit back and you have to reassess. If you've seen ICT do his live streams, there are many times where he's wanting the market to do something, but it does something opposite, and that gives him feedback and information. And then he says, I am no longer interested now in buy side, and my attention now goes down to sell side, right? It's if and then, and there's certain things in price that is going to trigger you to form that bias and make that decision. So from a longer term perspective here on the daily time frame of the dollar index, this area here looks appealing to me. We also have the minor buy side liquidity pool in the form of these relative equal highs that also sit below equilibrium. So I see there's a lot of liquidity above the market in the form of buy side liquidity, and I can see a big inefficiency here, right? We're going to have a lot of up and down movement before we get to this level, if we get to this level at all. If I have strong conviction that the daily and the weekly is moving higher, then I'm predominantly going to look for buys on the lower time frames if I'm intraday trading. Not every single day is obviously going to be a buy day. If I am counter trend trading to the higher time frame bias, which I often do, then I reduce my risk in half most of the time, because it is going against the higher time frame direction. Anyway, let's zoom in here on this piece of price action, and I can talk about this in a little bit more detail. So here we are zoomed in. We have the major buy side liquidity pool in the form of these.
Is it? It's gotta be this one. I want the 4 hour. Oh, it's this one here. Oh, we're right back within equilibrium of that dealing range here. We haven't had a true stop hunt. Well, we kind of had this. I think that we might want to come down, sweep these lows a little bit better, and then reprice higher. But that's not just not as bullish. If this was bullish, we probably would have already taken these highs, you know. So we do have a gap that forms here, and that volume imbalance there. Wait, is this anchored on the high? I don't know what happened. Let's just restart that. So we are back at equilibrium. This is equilibrium. For value gap in, for value gap out, it gets respected. Sensitive for value gap, volume imbalance, boom, gets repriced too. Thanks. Gets respected. Same thing for value gap in, for value gap out. That fair value gap in, well, I mean, it's pretty much just balanced price range, but I'm just using the logic of that. Respected perfectly. Yeah, order block right there. That's a propulsion block right there. Respecting nicely up to premium, up to deep premium, up into this volume imbalance right there. And we trade back down to equilibrium. That's where we're now consolidated. And now, oh yeah, now I kind of want to see, we have this order block. This order block looks like it might want to fail. I do want to see these lows, honestly. But we'll see what we want to do. We'll see what price wants to do. We have this breaker right here, which mean threshold of that you can draw out. We can draw out. We're pretty much at that level right now. So this is kind of like the last opportunity to buy, or I think we're gonna head back to these lows here, back into equilibrium.
These relative equal highs that just sit below the equilibrium price point of the parent dealing range. We have the major sell side liquidity fill below this low, and we have that daily sell side imbalance above the market. I want to now dissect this range. Now, we can use the high to the low. We can also grade the swing from the highest rejection block, so the highest up or down close, to the lowest rejection block, so the lowest up or down close. Now, I'll get into calibrating grades at some point as well. Now, there are different reasons for me grading or calibrating the swing. It's because I'm familiar with which signatures I'm looking for at what particular level, right? Because there's going to be a discrepancy between brokers, you're going to know that obviously there's going to be different highs and lows between brokers. So sometimes if I can't get a clear read and the levels aren't aligning, I'll opt to use.
Hold on, I'm gonna grab a little stack.
The bodies because that's where the volume is going to be. You're going to know that obviously there's going to be different highs and lows between brokers. So sometimes if I can't get a clear read and the levels aren't aligning, I'll opt to use the bodies because that's where the volume is going to be. Sometimes I'm going to use higher time frame levels that are overlapping in close proximity, and I will tend to anchor my fibs from those higher time frame levels. There's no secret science to it. It's just using a bit of logic. In the beginning, it's better to just use the high and low and look for levels in close proximity to those DRT levels. As you get more experience, you can start calibration of these DRT levels and refine things. Now, I've calibrated this dealing range, and we have the initial consolidation here inside of the calibrated dealing range from the body to the body. Now, this candle we displaced lower, closing back below this swing low, after we had ran buy side above this high, and also dipped above the rejection block here. We don't want to do anything until we see this happen, because you're going to get chopped up and down inside of a consolidation, and this is something why ICT says let time do the heavy lifting, right? This is an
That's a good quote.
algorithmic signature that gives us the green light that a sell program is about to commence. And leaving this fair value gap here is an important part of that signature. Again, all of this has been discussed in the Advanced Market Maker Model course. So we've completely filled in this sell side imbalance over here, making this a key high, and then we have our expansion lower from this high all the way down to this low down here. If I take this high down to this low and I project deviations lower, 3 standard deviations over here gives us a level of 100.617. We get 100.588 over here. We would round this level up to 600, and we'd obviously round this level down to 600. And this is how you do calibrations. This level also overlaps with the order block level. It also overlaps with the old equal lows and a fair value gap to the left, which is why it's a logical level. But again, that's just going to come by way of experience. Note how 1 standard deviation here overlaps really, really nicely with the equilibrium price point. Note what we see in the lower quadrant of the dealing range. We have these consecutive down close candles. What does this form? This forms an order block. Note the opening price of the order block. It sits dead on that 25 DRT level. When price runs through the opening price of this order block,
Consolidation. At equilibrium of this. Stop hunt here in that imbalance right there. Change state delivery here. We're seeking where? Volume imbalance. These equal lows. We generated fair value gap in, fair value gap out. This is just manipulation. Fair value gap. Boom. Propulsion. Boom. Up to where? Buy side liquidity. Volume imbalance. See, like this is nice PA here. Then here, volume balance respected once, twice, and boom. Change state delivery here. I would say change state delivery is right there, but we have a nice order block right there. Like this is that order block. Boom. Get straight to right to that level. Boom, back up and then down. Equilibrium. Then we take sell side here. Displacement higher, right there. Order block gets respected, and now we're back up within that mean threshold of that. We've already mitigated mean threshold now, so I want to see we have this breaker right here. Are we going to support or not? If we aren't, then I would like to see these lows here.
block. This is a change in state of delivery. This means that we have shifted from a sell program into a buy program. And now the algorithm is only interested in offering buy side delivery. equilibrium. Note how we come into it here. Retail ICT, because there's such a thing as retail ICT nowadays with everybody trying to teach what they don't know, they're going to look at these down close candles and they're going to say, well, this is the order block. No, it's not. The order block starts there. This is where we had the sell program that ran the lows, forming the order block. We have these relative equal lows, so there's a lot of sell side liquidity from a sell program into a buy program. And now the algorithm is only interested in offering buy side delivery. Note how we come into it here. Retail ICT, because there's such a thing as retail ICT nowadays with everybody trying to teach what they don't know, they're going to look at these down close candles and they're going to say, well, this is the order block. No, it's not. The order block starts there. This is where we had the sell program that ran the lows, forming the order block. We have these relative equal lows, so there's a lot of sell side liquidity engineered above the order block, and then we tap into that order block here. Notice how we accumulate around the 25% DRT level and go into this consolidation. Note that we had this buy side imbalance inside of the order block, and we had institutional order flow entry drill over here. At the 50% DRT level, or equilibrium, we have the same thing. We have these consecutive down close candles that run into the old order block, that run the sell side liquidity. We take the opening price and we extend it across. You can see how we find support here at the opening price. It's really nice price action there. More specifically, price is reacting to the high to the open. What is this structure? What is this PD array? It's an order block, but more specifically, this is an order block that has tapped into our parent order block and moved away from it. This becomes a propulsion block. The high to the opening price of the propulsion block, and look at the bodies over here. We wick into where? The equilibrium price point. And then what happens? Price really explodes higher. We come and touch it again one more time over here. That's a signature in itself, because I don't want price to come back into an order block once it's left like this. And if we do, I want to see an explosive move away from that area, and we haven't. We've been quite lethargic. So I'm going to get into this piece of price action over here, but this is already indicating some element of weakness to me. After we came into the propulsion block, we moved higher. Where did we go to? We came into this liquidity void. This is an actual gap, right? It's the absence of any bodies or wicks. What else does this price point overlap with? The midpoint of the initial range that gave us our projections. We can calibrate that to 106.5. You can see how we're failing to leave a body in that gap. We're failing to get above it or close above it. This straight away indicates that there's weakness here and the market might want to roll over. We then see price run lower, close below the 75 DRT level. Leave a small fair value gap. Look at the indicating some element of weakness to me. After we came into the propulsion block, we moved higher. Where did we go to? We came into this liquidity void. This is an actual gap, right? It's the absence of any bodies or wicks. What else does this price point overlap with? The midpoint of the initial range that gave us our projections. We can calibrate that to 106.5. You can see how we're failing to leave a body in that gap. We're failing to get above it or close above it. This straight away indicates that there's weakness here and the market might want to roll over. We then see price run lower, close below the 75 DRT level. Leave a small fair value gap. Look at the bodies respecting that DRT level. What is this indicating? That price wants to move lower. What are we seeing occur at the same time as all of this is happening? Well, if we look at intermarket analysis between a correlated pair like the British pound, when we was making this high on Tuesday, 16th of April, we were making this.
The order block in -2 is also the monthly order blocking threshold. There's a lot on this. Here, let me look at that respect to the 25% of that order block. I believe, right? 25%. No, that's the doing range. Is it? Oh no, I covered up the order block. Or I covered up the order block. Oh yeah, you can see mean threshold got respected nicely there. -3. Yeah. -2. Then -1's equilibrium of this. And -2 is almost like the 25% level too. That's why I think this is definitely a protected low. Oh, for sure. I think this is definitely the low that we put in. Matter is like, when are we gonna take this here? Like, I think it's just a lot more probable that this is the low that we have.
Low on the pound. On Monday, the 22nd of April, we had posted a lower low with pound, but we failed to post a higher high. So this is an indication that there's something going on, right? On the 1st of May, we post a higher high with the dollar index, but on the British pound, we fail to post that lower low since they're inversely correlated. On the 9th of May, the dollar index fails to post the higher high when we see the bodies rejecting to close above the 75 DRT level. On the British pound, we see it post a lower low. And then what happens? And then we see the dollar index displace lower, and we see the British pound displace higher. It's also worth noting that we've completely rebalanced the sell side imbalance created on the dollar index on the 15th of May, and we haven't even dipped into the buy side imbalance posted on the 15th of May. Now notice what I'm saying, right? I'm talking about the dates. Smart money tool, smart money technique. It's not. It's smart money time, right? And in my opinion, I think when ICT talked about SMT and he was very vague about it being called smart money tool or smart money technique, it's actually smart money time because that's just going to give it away, right? It's time. Time is the most important factor. When are the highs and lows forming?
That's crucial.
It's not just any high and low. What I just said there is a huge gem. And I'm going to coin that term, smart money time. That's what SMT stands for. Go back through your charts and backtest and pay attention to the time, the session, the day of week, the month. And this is going to give you so many light bulb moments going forward. Anyway, let's get back to the dollar index here. Huge gem. And I'm going to coin that term, smart money time. That's what SMT stands for. Go back through your charts and backtest and pay attention to the time, the session, the day of week, the month. And this is going to give you so many light bulb moments going forward. Anyway, let's get back to the dollar index here. So you can see how we ran above this high here. This high became an intermediate term high because we rebalanced this sell side imbalance over here. We ran above that level here and into the equilibrium price point of a consolidation. After we seen the SMT divergence between the British pound and price failed to get back above the 75 DRT, and we've seen this breakdown with displacement below this swing low over here, leaving this sell side imbalance. Now, what am I looking at here? I'm looking at what retail are thinking. Retail are looking at this trend line here. I'm looking at this as a whole lot of sell side liquidity that also sits inside of a discount relative to our dealing range. I still anticipate that we could likely run
Low key, this might be the way to do it. I kind of like this. Oh, that's a perfect trend line. Oh, beautiful.
higher to sweep the buy side above here, and dip into that sell side imbalance. But I'm anticipating that before they do that, they're going to upset the retail sentiment. Now, there's a few reasons why I'm anticipating higher prices. Is because we do have election year, right? I don't think the dollar should be where the dollar should be. In my opinion, I think the dollar is going to drop longer term. Looking at the way the economy is, it doesn't make sense for the dollar to be propped up, and of course everything's manipulated. And they're going to most likely manipulate a higher dollar going into the general election. Seasonally, we should be running higher on the dollar at the minute, and we're not. We run lower. But I'll get into that in a second. Let's zoom into this piece of price action, and I can then get into a little bit more detail. So here we are, zoomed in. Now, last week I said that we have this sell side imbalance, and we were being held
We fully repriced that right here.
below the consequent encroachment of this sell side imbalance. On Monday, we failed to close above the discount low of that sell side imbalance. On Tuesday, we failed to close above it, but we created this down close candle. On Wednesday, we dropped into that down close candle, and then we really ran and fully closed this sell side imbalance. Thursday, I was looking to see, do we want to close and have any legs to run higher? We dropped all the way down into the discount low of that sell side imbalance. We found support there, but what is this here? This is an immediate rebalance, right? So the next candle, I'm anticipating for this to run higher. If it does not do that and it breaks down and I have still an underlyingly bearish bias to run the lows down here, this is going to give me a clue and an indication of what price is likely to do. On Friday, instead of finding support on the premium end of the sell side imbalance, we break down and close below the consequent encroachment. Now, we can mohawk outside of a fair value gap, obviously, which is why we place our stop, the candle that created the fair value gap, low in this case. So this candle here, we'll be placing our stop above this high. There are a lot of people who place the stop above the premium high of the fair value gap. But because we can mohawk outside of a fair value gap, you should never place it above the fair value gap. Some people place it above the candle that created the fair value gap, and in my experience, you can still get tripped out, like as you can see over here as well. So a safe stop would be above the high.
Then it wouldn't be as good of a trade, you know? I guess it doesn't have to be, but
Candle that created the high of that sell side imbalance, right? And vice versa if we're on a buy side imbalance. What else am I noticing? I'm looking at this inverse fair value gap here. So we have this buy side imbalance. We came down, we fully rebalanced here, and look at the bodies. And then we ran higher, very sluggishly, back up into the premium high of this inverse fair value gap. In order for me to be convinced that we've turned a corner, we'd have to find support at the consequent encroachment of this inverse fair value gap, and then really displace higher. However, above price, we have these consecutive up-close candles, making a bearish order block. Inside of that bearish order block, we have this volume imbalance. And you can see how we're touching the consequent encroachment.
wow.
Bodies not getting back above that volume imbalance. And we also have these consecutive down close candles. So we have an area of mitigation to the left. Unless the market tips its hand and really shows me that it's going to displace volume imbalance. And we also have these consecutive down close candles. So we have an area of mitigation to the left. Unless the market tips its hand and really shows me that it's going to displace away from this area. But since we came back into the order block and since we filled in this sell side imbalance, price has been very lethargic, right?
No 104 double bottom. Yeah. Because here we're just generating buy side here, I think. 17th of May. Here.
Right, this is giving me an indication of weakness, right? And again, dipping into the order block one more time was another reason why I'm thinking that price is running lower. There are a whole lot of other reasons, and this is with intermarket analysis as well, and understanding how dealing ranges work with measuring strength, and that's another topic and study that I'll get into at some point. Between May, April, and June, we anticipate seasonally for the dollar index to be bullish, right? May is generally a very, very easy seasonal tendency to see the between May, April, and June, we anticipate season.
Do I have that in my template? I think I have a dollar seasonal tendency. So he's saying May, June, we expect to be bullish.
Seasonally for the dollar index between May, April, and June. We anticipate seasonally for the dollar index to be bullish, right? May is generally a very, very easy seasonal tendency to see the dollar go higher and to see a decline on pound and euro. However, we aren't seeing the decline here seasonally as we should be doing. So this is again giving me a reason to think that price may want to drop lower and upset the retail sentiment with the retail trend line. There are three key levels in particular that I'm looking at. The premium high of this outside imbalance, the premium high of this inverse fair value gap, and the actual high of our breaker slash distribution block. Until I see any convincing movement with displacement above those levels, I'm only interested in shorts. I like how we've also had this smaller intraday retail trend line being created here on the lower time frames. So again, this fits the narrative that we want to see price move lower. Now we do have a bank holiday on Monday, and we have some high impact news towards the end of the week. And you want to look at that economic calendar as a roadmap and filter out the times that you want to be in front of the markets. And again, that is an absolute great study for you to go and backtest and see how the market responds during high impact news events. Again, that's something that I'm planning on getting into during this mentorship. When we get more into the intraday price action, that's something that I'm going to really bring heavily in. So with that, I hope you guys have found this one insightful. There's again a lot of information that I've thrown at you today. You may have to go through it a few times, but if you have found any value out of this, please leave me a comment below and subscribe and like this video. It'll help the channel. Again, thank you guys for watching, and I will catch you again in next week's lecture. Take care, guys.
Just finished my 3 hours of my trade journal reviews. What's your thoughts on DRT episodes so far? I would think that they're pretty good. I mean, I always say this. I mean, I don't think that you can complain about free information. Like, if you complain about free information, then I literally don't know what to tell you. Like, just, you don't have to watch it. I think it's a good mentorship. He's got good psychology, good technicals. I mean, he's pretty much breaking down the dollar consolidation, which isn't easy to do. Like anytime in assets and consolidation, it's not easy, and it's also a good study because it is in a consolidation, so therefore there's a lot more things you have to outweigh. It was good, Fitzgerald. such as work. Always now we into psychology. Nah, it's after, right? 100% like that. Yeah. What's good, Sterling? How you doing? Alright, before we look to engage. Hey, just finished the notes. Lecture 4. Um. Uh,
Alright guys, welcome back.
do you want to hop on episode 5?
Alright guys, welcome back. Hope you're all well.
Yeah, we do.
So in today's lesson, I'm going to touch on a little bit about journaling and talk about how we trade in the consolidated market. These are two questions that I've been asked quite a lot recently, so I thought I'd do a short video to give you some examples and my thoughts on journaling and obviously trading in consolidated markets. First, I want to start by going through this week's economic calendar. So obviously we're in June, and this is the first week of June. So first week of any month, if you notice here on Friday, we have non-farm payroll. Quite a lot of heavy hitters this week, so you want to trade with caution. Protocol for non-farm payroll week is we do not want to add any more positions by Wednesday New York session. We also have ISM services PMI here on Wednesday, monetary policy statements, and ECB press conference on Thursday. The beginning of the month, because of the volatility that we have, if I am day trading, then I will opt to trade Monday, Tuesday, Wednesday. Any other week, I don't trade Monday. The first week of every month, I'm always expecting some sort of consolidation earlier on in the week or the previous week. Now, we've obviously had a lot of stuff in terms of news over the weekend with trade Monday, Tuesday, Wednesday. Any other week, I don't trade Monday. The first week of every month, I'm always expecting some sort of consolidation earlier on.
Consolidation every first of the month. This monthly candle, we open, low, high, close. It was a nice candle. Open, low, high, close. Open, low, high, close.
On in the week or the previous week. Now, we've obviously had a lot of stuff in terms of news over the weekend with Trump, and obviously we're in an election year, and we're obviously in a longer term consolidation of the dollar index, so I expect quite a lot of volatility going into.
I'll be back in a minute or two. Dude, my hair, it gets so messed up with that headphones. Hey, hey.
The election month. Now, generally, volatility will cause manipulation. But prior to manipulation, we're always going to get some form of consolidation where they
Low resistance liquidity. Volatility, market open.
a lot of volatility going into the election month. Now, generally, volatility will cause manipulation. But prior to manipulation, we're always going to get some form of consolidation where they're going to engineer liquidity in the markets. Without the
Prior to manipulation, they will seek to
we're always going to get some form of consolidation where they're going to engineer liquidity in the markets. Without liquidity, nothing.
engineer liquidity.
To get some form of consolidation where they're going to engineer liquidity in the markets. Without liquidity, nothing moves. You want to use the economic calendar as a roadmap. So it's one of the most important things when it comes to trading, because this gives you the schedule. Depending on the week and the news events during that week is going to dictate the market profile for that week. We're going to do a lot of study on this going forward, but I'm just introducing it here. If you are new to trading and you haven't got a lot of experience, my advice is miss the first trading week of every month, especially in the current climate that we're in. Just observe it and journal, right? And that brings me on to the next topic. This is inspired really by one of my students, one of my private students. He sent me some screenshots of his journaling and I was actually really impressed with it. And I've had a lot of people over the years ask me about how do you journal effectively and why is it so important. And I thought I'd share it here with you guys because it's, in my opinion, I think the best way to really understand ICT concepts is to go through previous price action and journal everything that you can see.
Oh, I'm not on a live account currently. I don't know when I'll start. I don't know. I really don't. I think Loki in a year. I think that's what I'm gonna do.
There's a few examples here that I want to share with you guys. Number one, I like how he's put as much information as he can on the charts, which is relevant to what he can see in price, right? Because you're going to have to get to a level where you're confident in yourself. It's obviously one thing listening to somebody talk about price like I'm doing with you guys. And obviously, this particular individual has been through my private mentorship as well, and he's really taken it seriously. Recently, with dealing range theory and what I've been discussing on this YouTube, YouTube channel. You can see how he's incorporated that into his observations when he's going back through price and he's backtesting what he can see at the 25 level or the 50 level and the 75 level, and what he is noticing at specific price points on specific dates, and how he's dissecting PD arrays and how price is reacting off specific levels. All of this is going to train his eyes to see these repeating signatures in price. The more he does this, the more he's going to get confident in how price delivers. The more he's going to be confident in knowing when a fair value gap is going to hold, which order block is going to be a high probability order block. And the more you backtest like this, the more you journal, the more you document your observations, the better and better you're going to get. If you're looking at more of the lower time frames, then note what time the highs and lows were formed, note what high or medium impact news event was taking place for that day and at what time, and then write your observations down prior to that news release and after that news release. Where did price go? Was there some form of manipulation? Why did price move to that specific level? And when you ask yourself these things in your journal or as you're backtesting, the more you do this, the easier it gets. Unfortunately, there is no shortcut, because I tried doing a shortcut for years. I hindered my growth because I was stubborn. I thought I didn't need to do this, I'll be the exception, and I wasn't, right? It's only when I started to really document things, when I started to really backtest and journal and write my observations, is when it started to stick. The key here is just to be consistent with it. The money is going to come as a byproduct of doing this. If you learn this skill very well. Once you apply risk management and you understand trade psychology with this skill set, it's extremely powerful. Yes, it may take you longer than you anticipated. In fact, it is going to take you longer than you anticipated. But don't put pressure on it. Just be consistent. Show up every day.
In a year, I've been trading for about, I would say a year. Honestly, like 6 months. 6 months being consistent with what I've been doing.
And write down what you can see in price. Eventually,
But I don't even say that long. I don't know. I think like 5 months. But I would say like 3 months. I've been taking it seriously.
things will just jump off the charts and your eyes will go directly to where they need to go. You won't be in a rush. You'll be waiting for the highest quality setups because you've seen these signatures in price hundreds and thousands of times. And as you're journaling, as you're writing your observations, as you're backtesting, every time you write this, it's being stored deeper into your long-term memory. And this is the part that people don't want to do. This is the part why people fail. If you want to be successful in this, you have to take it like it's a business. And journaling and backtesting is a part of that business. Collecting this data is a part of that business.
Appreciate it. Yeah. No, I haven't been trading for too long. Like if you look at my YouTube, you can kind of see that's kind of how I measure like how long I have been, because I just look at my YouTube. Nice, bro. Nice.
Being accountable and showing up every day is a part of being professional and being a professional trader. You're a professional, right? Pressing buy or sell just to see what happens is not. Not trading. And until you get yourself out of that cycle, you're never going to be able to get this. Unfortunately, most of the industry just does that. Buy my system, here's my Lamborghini lifestyle, that's all rented. But they won't give you the true nuts and bolts of what it actually takes to become successful as a trader. Telling you that this is going to take you time and it's not going to be easy is the reality of trading. You have to allocate time in the day to do stuff like this. You have to drill this into you that I have to, if I want to be a trader, and I want to make money in these markets, I have to, as a part of my routine, as a part of my lifestyle, allocate some time in the
Nice, nice, nice. Hey, I appreciate it. I appreciate it. I appreciate the support. I mean, I guess we'll see. We'll see. I mean, realistically, I feel like if I stay consistent with it every single day for three, 4 years, if I do one of these streams every single day for 4 years, I mean, I don't think there's any way it doesn't happen. But I'm saying not even 4 years. I'm saying like 10 years. 10 years.
day to do this. Those who say ICT concepts don't work and he's a fraud and there is no algorithm is because they've never actually sat down and done stuff like this. So I just wanted to share this. I thought it was a really good example. You don't need to write pages and pages and pages. Look for the salient points and note them down. It shouldn't take you more than half an hour every day to go through the previous day, the previous week's price action, and just note your observations. And just doing that alone will give you so much of a clearer understanding. Like, really don't underestimate how powerful doing this is, right? Anyway, let's get into the charts. So here we have the dollar index on the daily time frame. Now this is pretty much the same chart from where we left off last week. We've been really consolidating in this area. We are in a longer term consolidation. And I highlighted this on the weekly time frame in the previous mentorship lecture. Now, when we are in a higher time frame consolidation, the lower time frames are going to reflect what the higher time frames are doing, right? Price is going to move choppier, it's not going to be as clean, and you're going to get a lot more consolidation. price is going to stay inside of dealing ranges for longer periods of time. When the higher time frame is moving in a direction, and it's trending, the lower time frames are so much easier to trade. That's when you see all your PD arrays in price being supported, and that's when you have your nice low resistance liquidity runs. That is not to say that that can't happen on a lower time frame inside of a higher time frame consolidation, because obviously you're going to get price swings and some pockets of clean price action. How do you trade consolidated markets? We have already established that we have this dealing range where we have our major buy side above these highs and we have our major sell side down here. So this is our dealing range high and our dealing range low. All of this price action is inside of our dealing range. Now we could stay in a longer term consolidation. Really, this is building engineered liquidity in the market. It's manipulated, right? So all of this price action is staying inside of this dealing range from this high down to this low. Now, I've touched on this in the first episode with the introduction to the dealing range theory. And essentially, we have seen price run from this low all the way into our extreme premium, which is our highest quadrant. Inside of the extreme premium, we have come into the equilibrium price point and we've rejected from this liquidity void. Now, when we have consolidated markets, we move from extreme premium to extreme discount and back to equilibrium. Now, when we have consolidated markets, we move from extreme premium to extreme discount and back. To equilibrium. Inside of this extreme discount, we have this buy side imbalance, or the remainder of this buy side imbalance, from this candle's low to this candle's high. Notice the consequent encroachment overlaps perfectly with the equilibrium of that lower extreme discount quadrant. We also have the retail trend line that I spoke about in last week's video. There's a whole lot of sell side liquidity resting below this trend line. We're currently inside of this fair value gap. This is a sell side imbalance. We had sell side delivery here, and then we had buy side delivery back through that range. Now the consequent encroachment of this sell side imbalance rests over here, and we're having a hard time to close back above it, as well as the three levels that I identified last week. We also have this buy side imbalance that has been rebalanced here. Again, look at the bodies. Now inside of a balanced price range is where we're going to find consolidation, choppy price action, and generally we will see high resistance liquidity run conditions. I don't want to trade inside of here. The market here isn't showing any signs that it wants to run higher. The fact that we're not closing above this high, you can see the bodies are really respecting it, indicates weakness to me. If I were making these markets, I would run it lower to upset the retail trend line, rebalance, and then take it higher to run the equal highs up here, and into that weekly sell side imbalance. If we run buy side first, then I would anticipate a run on sell side after. That will be the manipulation to take us higher. If we run sell side first, then I would be looking
I
at
think
buy
we're gonna
side
run
after.
buy side then.
So the manipulation to the sell side was to upset retail sentiment, right? That's how I prefer to see it be played out. Now, if I move over to the euro dollar and the pound dollar, this is again on the daily time frame. You can see how we have our dealing range high and our dealing range low with our DRT levels plotted on each one. I want to bring your attention to this sell side imbalance, which we have traveled through to become an inverse fair value gap, and the consequent encroachment is being respected really nicely by the bodies over here. We've wicked into the equilibrium level, and then price is rejected and moved higher. I like how we've wicked back through the opening price of this down close candle. Here on the British pound, you can see how we have this small sell side imbalance that also becomes a
Oh shoot. Hey, we got it. You're that 50% level right there. I'm back. Look at 50% right there. At the buy side, now we have a breaker. But now we're disrespecting that breaker. Because we're in consolidation. Or, I mean, we still could be respecting it. And that 75%. Yo, Spirit, bro, you can just keep it. Do not leave. Appreciate it. The time studies thing from Discord you sent feels like I'm calculating the secrets to the universe. Going to give it a taste. Let you know the result. The time studies. Wait, what I send? Did I send to you or? I'm gonna be honest, I don't really use this. Oh, this thing? Is that what you're talking about? Oh, that I DM'd you? Got you. Got you, yeah. I mean, I'm gonna be straight up. You don't have to pay for anything, bro. You don't have to pay for any course. Just, I mean, the good thing about like a course or a mentorship is like, if you're able to get on, if you're able to get like tutoring from someone, or like you're able to get your questions asked, I feel like that's pretty good. But honestly, I think just bro, just like look up someone's course. But that's just me personally. Like I'd rather just look it up, cause like everyone be leaking nowadays. It's like a whole culture thing. I haven't used Twitter in a minute. I was using Twitter for a second just to get some information. I'm getting kind of worried, bro. My stream hasn't uploaded yet. Do you think it's just processing? My stream from yesterday is yet to upload. the whole the the whole 19 hours. That was
An
crazy.
inverse fair value gap, and that's offering support over here. We also have this.
Yeah, I would say the GU is a GU market maker model is nice. I think a weekly or no, that's a monthly order block. I'm pretty sure. Off of a monthly order block, I'm not. I love. We're technically a propulsion block. We're technically like a. Because we have a balanced price range here, and then off that balanced price range, we could create a down close candle. Smart money's buying within that, and then we end up having that becomes your order block. That can be an order block. That's order block. We come back down, and what do we form? We form a fair value gap with that, with a high as well. I mean, I think it's just more likely that we head to here. The only thing I didn't like about this, or that I don't like about this, is these highs here. I would have liked to see them like this. If the highs were stacked like this, and we had low resistance liquidity signature, that right there would have been a little bit easier of a trade, but we have high resistance. Do we have SMT yet though? July 2nd. Yeah, we have SMT here too. Maybe $1. See, that's a weekly expectation I had. Not quite. Came down, took the low. I want to see us reclaim that order block right there. Now, if I'm looking at this, man, I just want to see if we don't take this high, then I would just stay away from Forex, bro. And on EU, my target becomes here unless we react off of this, unless we respond to this breaker. Like even here, like we've already taken buy side. I just don't think it's ideal. It's not ideal. And I feel like that's most of Forex right now, just because New Zealand dollar is showing a good possible market maker buy model. But even here, like on New Zealand dollar, it's not like we have like a clear draw on liquidity. We have high resistance. Like we've already taken liquidity here, taken buy stops there. So I think it's just lower probability. But look at that mitigation right there. Very nice. Yeah, I want to do another weekly outlook. I think they're kind of nice, just like to try and predict what's going to happen and then see if they unfold and then just continue to try and have predictions because, like, I think you definitely got to predict because that's what trading is. We're predicting the future.
Up close candle as a bullish breaker. You can see how we're expecting the mean threshold there really nicely. I'm also noting the fact that we've made a lower low here on the euro at a support level, and we failed to go lower on the British pound. We have relative equal highs above us here, so I want to see that.
So like something like this though, what I notice a lot is like a model like this just isn't ready yet. Like we need to have more time before then we come up to buy side. Like here, we delivered buy side or sell side pretty fast. I don't know if buy side's gonna deliver just as fast. That's something that I've noticed, and sometimes like when we have a fast sell side of the curve, and then you think that we're just gonna immediately have a fast buy side of the curve, sometimes you get tripped up in what's actually going on. or in what, like we might just need more time to complete that model.
Ran through. Ideally, I would like it to say firm here. I want to see this measuring gap left open and make a run for these highs up here. We have a whole lot of buy-side liquidity above these relative equal highs on the euro, and then we have all these equal bodies up here. So again, there's going to be a pool of buy-side liquidity resting above that. So if we do see a drop on the dollar index, then that's going to send the euro and the pound higher. I also like how we have these lower highs, and this is known as a low resistance liquidity run signature, right? This provides an opportunity for the market to run through this area with much greater ease than if we have higher highs. Whenever I'm looking at price runs, I'm always looking for this signature. I want to take your attention back to the dollar index on the daily time frame, and I want to bring your attention to this volume imbalance that we outlined last week, right? So we have these consecutive up-close candles as an order block, and we have this volume imbalance in the discount end of this bearish order block. You can see how the bodies here are respecting that. This is what it looks like on the 4-hour time frame. We came into it once over here, and we came into it, and look at, again, the bodies respecting the premium end of that volume imbalance. Now, where's the dealing range here? We've run this high over here, and we ran this low over here. So the dealing range is going to go from this high down to this low, and then we can grade our DRT levels. I keep doing this the wrong way around, I do apologize. This should be the 75 DRT level. So the 75 DRT level overlaps beautifully with the consequent encroachment of that volume imbalance. Also note where we have our gaps forming. Right? I've done a number of examples on gaps and where they form throughout this mentorship already. But here's again another really nice example. We have
gaps form at every quadrant.
buy-side liquidity above these relative equal highs over here, and you can see how we've run above that here, but the body's again telling the story that it doesn't want to close above that volume imbalance inside of that daily order block, just coming shy of completely closing in this sell side imbalance. Now again, that's very typical when we are in a consolidation slash seek and destroy profile. If you look, we've just run highs and run lows and run highs and run lows, and then always going back to the midpoint of the range. This here is occurring inside of an extreme premium for them, if you're tipping shy of completely closing in this sell side imbalance. Now again, that's very typical when we are in a consolidation slash seek and destroy profile. If you look, we've just run highs and run lows and run highs and run lows. Lows, and then always coming back to the midpoint of the range. This here is occurring inside of an extreme premium, and price will stay between these two levels. Inside of the extreme discount, you can see how we swept below these relative equal lows, but again, we've just come short of fully rebalancing this buy-side imbalance. Now, this is a signature I see all the time inside of seek and destroy or consolidated markets. You don't want to trade inside of this region. You want to look for buys inside of an extreme discount, which has swept liquidity in the form of sell side liquidity, and you want.
Oh, low key. That's a good.
To only take shorts inside of an extreme premium once we've run liquidity and or dipped into a fair value gap. This is again another beautiful example of dealing range theory.
Once we have taken liquidity,
and how these levels are structural support and resistance, and how price will move from extreme premium to extreme discount. So I hope you guys have found this one insightful, and I will hopefully catch you again in next week. As swept liquidity, you can see a consolidation slash seek and destroy profile. If you look, we've just run highs and run lows and run highs and run lows, and then always coming back to the midpoint of the range. This here is occurring inside of an extreme premium, and price will stay between these two levels. Inside of the extreme discount, you can see how we swept below these relatively equal lows, but again, we've just come short of fully rebalancing this buy-side imbalance. Now, this is a signature I see all the time inside a seek and destroy or consolidated markets. You don't want to trade inside of this region. You want to look for buys inside of an extreme discount, which has swept liquidity in the form of sell-side liquidity, and you want to only take shorts inside of an extreme premium once we've run liquidity and or dipped into a fair value gap. This is again is another beautiful example of dealing range theory, and how these levels are structural support and resistance, and how price will move from extreme premium to extreme discount. So I hope you guys have found this one insightful, and I will hopefully catch you again in next week's episode. Thanks for watching, and take care, guys. Alright guys, welcome back. I hope you're all well. So this week in front...
First week of... Hey, nice, bro. Good trade. That was a good trade, looking back. I kind of want to backtest that a little bit, the consolidation theory. That's what I'm going to do. After I put on some music. Alright. Because I know ES did that the other day. Or yesterday. And I was marking this out too. So you want to be looking for buys primarily in extreme discount after taking liquidity here. And offloading at premium. Right here. We take some form of liquidity here, and then we offload at premium. Here, premium, we're taking highs here. And we're coming back down to extreme discount. And then the same thing, we're coming here. But I mean, it's the hard thing to like know that we're going to be within a consolidation. And the first sign of that is big whipsaw at NFP. We hit a big low, a big high. So I can tell that we might be consolidating here. I want to look at YM too, because I know YM for sure is in a consolidation right now. 100% I know. On the hourly. So if we see this, same concepts. We are taking long, or if we are to trade this, the only way to trade this is shorts in a premium with sweeping liquidity and then looking for discount. So here we're going here to premium and then premium here, we're taking discount and then almost coming back to equilibrium. But here we take a high here, come back to equilibrium. And then here, it's looking like we're really rejecting that 50%. That 50%. And look at where we're at. We're just consolidating around the 75% of that dealing range. But let's pull out this dealing range. Or yeah, in terms of this dealing range, we're around 50%. Notice how 75% is this high right here. Dealing range theory. Let's look for some examples of consolidation. Here we're consolidating. Buy side coming back down to discount. Sell side coming back up to premium. Market consolidate 70% of the time. When the conditions happen, be confident going long and old low and short old highs. I would agree. That's a good quote. I mean, think about it though. Like, the markets are prone to consolidate more than they are to just expand and have energetic price runs. You know, like, it's not every single session, every single day, it's just going to be expansion. That's not how it works. Not every single day, not every single section. There's just going to be expansion. There's got to be some form of consolidation. And, I mean, the trick is to either avoid those consolidations within your trading or try to trade them. NFP, okay. NFP is usually the first Friday of every month. We want to avoid trading Thursday and Friday of NFP weeks. Every NFP week, Monday is a trading day. On non-NFP weeks with no red folder news, use Monday as a case study, and for more information on the weekly range. Volatility will bring... Dang, I need to get like a... I have so many red lines on this. It's only Monday and Friday because they want me to capitalize it. Volatility will generally bring manipulation into the market. If they are to manipulate the market, they have to generate liquidity prior to that manipulation. Without liquidity, an asset cannot move in price. The economic calendar is the most important factor or aspect of trading. It already gives you the schedule for the week. Oh my, another misspelled word. Oh, it's absolutely no, no shortcut in trading. You have to journal. That's what I'm gonna do every stream. When I end a stream, every single time, I'm gonna go over what I'm feeling, how I'm feeling like, and yeah, I'm just gonna like go on like a little rant, I guess, just like document it, you know. It's like have it down, like how I'm feeling. Like I'll be like, today, right now, I'm feeling like I want to be there. I want to be there, but I know that this is the work that I need to put in to be able to get to where I want to be, and right now I feel confused. I feel lost. And then maybe it's just something like that every single day. And then there it's in my journal at the end of the video. And then I have that to go back to. Journal and see. That's fact. Don't put pressure on yourself. Don't put pressure on yourself. Just show up every day. Don't put pressure on yourself or enforce any deadlines for you to reach certain outcomes. Just show up every single day and be consistent. Be consistent. Every time you write it down and write out your thoughts. Jeez, I cannot spell right now. Geez, this is a good. Like, oh my gosh, this is a 17-minute video. It's taking me the longest to do these notes. You have to know your business. You have to have data. Collecting the data is a part of this business. Being accountable and showing up every day is a part of being professional. That's like, I don't know, you can call me corny, but I don't know, I always like to wear polos. Like, if I'm on stream, I mean, I'll occasionally, like, won't, but every market day, I don't know, today I'm just wearing one because I felt like it, but I always like to wear polos, and the reason for that being is, I don't know, I like to be professional or act professional. Like, I'm not just gonna wear t-shirts. Like, I'm showing up, I'm being present, and I'm working today. Right now I'm working. And I feel, especially with trading, especially with someone like entrepreneur, it doesn't seem to be work, or at least like other people, you know? Like, my parents are probably like, oh, he could just be down there doing something, or like, oh, what is he doing? I'm working. But just because I'm not actually clocking in and punching into a clock does not mean I'm not working, you know? Absolutely, I'm working right now. And then you also have to treat yourself like a professional. You're not going to be a professional if you don't treat yourself like a professional. You are a professional trader. So treat yourself like one. Are you writing these? No. Oh no, I just watched a lecture. If you rewind, I watched a lecture, and then I'm typing these notes over the lecture after the lecture. That's what I like to do. So, I mean, it's kind of like a pain, and I'm not gonna lie, I used to just watch a video and then watch a video, then watch a video, then watch a video. But, like, I mean, even this, I don't think is enough. I feel like after every video, like, there should be backtesting that goes on. But I've watched these series again once before. I've taken notes, and now this is my second pass through, and then I'm just solidifying these notes. And yeah, this is how I take notes. When I watched ICT core content, what I did is I actually have a journal. It's called ICT core content, and then I went in there, and I took like some good notes. Like, I'm kind of proud of this. Like, it definitely took me like a little bit longer. Like, I would say, like, if I'm watching an ICT videos that's like 20 to 30 minutes, just doing the notes handwritten and like doing drawings in there, it took like an extra hour on like every video. So like, it took me some time, but it's definitely worth it, because like, even if you go from video to video, I just don't think that like you're really gonna retain much. You're really not gonna retain any of that. And I'm not gonna lie, like, most of the stuff that is out there, like, you don't necessarily need, but it all adds up into each other, adds on to each other, and the more you do it, the more you're gonna get better at it. And you just gotta give yourself time. I think time is the key ingredient that I just need to submit to, and that's what I'm submitting to. Submitting to time, and just trusting the process, trusting the work, trusting me as myself, trusting me and my character, trusting me that I'm gonna take myself there. I'm gonna start making mental logs. That's fact. That's what I'm gonna do. I'm gonna start doing mental logs every single day. I think that's a good idea. I think that's a good idea. Just have mental. Nice. I'm talking like mental journals. Like I'm talking about like. Nah, I kind of hate how I did activated. Not gonna lie. I don't
We
hate
stopped.
it, but I feel like it was a little bit corny. That's cool though. What I'm gonna do is I think I'm just gonna do mental logs every single day. Mental log as a day trader. Hey, thanks for the sub, bro. Appreciate it. It's something to look back. Don't pri don't private it. Yeah, I won't have it private. And like I ain't gonna sugarcoat anything. I'm not gonna go into like my personal life, but I don't know. I think it would just be something to cool to look back on, and always like Ali Khan saying, just be present with yourself because you're not gonna get better if you're not able to be present with yourself. Hold on. I don't know how. I'm gonna make you a mod. I'm gonna make you a mod. I don't know how I don't have you as a mod. So disrespectful. My bad. I don't know. I had mods and then like. I mean, if I make you a mod and if you don't show up to my stream ever again, like I honestly don't really care. How do I do this? Hey, there we go. I just made you a mod. Price will move from extreme premium to extreme discount. I appreciate Prestige. I don't know why I labeled this DRT, then put something that's price related inside of it. I used to go to a study club website where people would open cams and just show what they're studying for motivation. Then I stopped and went to watch trading streams because that's my focus on. Study cams. Yeah. Low key, this website, or, whoa, why did I just say website? I should just do these as motivation, you know, to encourage people to backtest. And, like, if you're not there right now, just keep on putting in the work. And hopefully, what I do can inspire some other people. And hopefully I can get somewhere. But we'll see. We'll see where it takes me. Honestly, the only person that's stopping me is myself, and also what I'm willing to sacrifice. For sure, because there has to be sacrifice if you
In front of us, we have.
if you want your dreams. At what point is sacrifice too much? appreciate it. I appreciate it. Episode 6, Power 3.
Of the economic calendar. Just going to quickly run through this and answer a question that I had from a student regarding expectations. And then we'll do a bit of analysis, what transpired from last week, and then I'm going to show you a good example of how we can incorporate Power of 3 as a filter for entry criteria. So firstly, as you can see here, on Monday, we aren't expecting any high impact news. So generally, I wouldn't trade on a Monday unless it's non-farm payroll week. And I'll show you what that looks like in an example later on in this presentation. We've got some heavy hitters here on Wednesday, CPI and FOMC. So again, you want to be very careful trading on Wednesday. On Thursday, we have PPI and unemployment claims. And then Friday, 10 a.m., we have consumer sentiment down here. If you are trading, I would let CPI and FOMC settle before going in. Thursday, Friday will probably be decent trading days. Monday I would avoid here with no news, and it not being a non-farm payroll Monday. Tuesday would be a safe day to trade as well. I want to spend as little time as I can on these charts, and the economic calendar helps with that. It gives me the day and the time where there's going to be an injection of volatility. So I use these times.
Economic calendar gives us a date and time where, dang it, bro. Where you live? I'm from Colorado. There'll be volatility, and we know that volatility equals generally manipulation. Generally. Unless the manipulation has already happened before the volatility.
And these days of the week to position myself in front of what session I want to trade that day. I revolve my week around the days of week that I'm going to be trading, and it's not every single day that I trade. And that was a learning curve for me because I assumed day trading was trading every day. And when I first started doing this, I would be taking 5-10 trades a day sometimes. And this is something that neophyte traders get caught up in, is the more you trade, the more money you're going to make. And it doesn't actually work that way. It's the opposite. The more you trade, the more money you're risking to lose. When I stopped viewing day trading as everyday trading, and I started to hunt for the best setups, the best quality setups that I could find. And I revolved my trading times around the economic calendar. I realized that the less I traded, the more money I made. And that's going to come by way of experience, where you can identify high quality versus low quality setups. Now, I would rather take less trades, and when I see the best quality setups, I increase my risk on those trades. At the moment, I'm trading maybe once or twice a week, and sometimes there goes a whole week where I don't even trade. My favorite time window is the New York session, and generally I'm in front of my charts 2-3 times a week during the New York session. Now, I got this question regarding news drivers, and it's a great question. The question was, is news always going to be manipulation? Is it always going to be a Judas? The answer is no, right? And funnily enough, in today's example, later on in this presentation, I will show you an example of why it isn't always just manipulation. In some cases, manipulation could have already taken place before the news event, and Then the news event is that injection volatility and price continues rather than reverses. But again, I will show you an example later on in this lecture. Again, I cannot stress how important the economic calendar is. You have to get comfortable and familiar with the economic calendar, and I put this off for years. But this helps you frame your trades. It gives you the schedule and the template for the week. If you want to do this professionally, and you want to take this job seriously, then you're going to have to incorporate stuff like this into your analysis and into your trade routine, right? CPI is usually a one-sided event where price just really takes off. And FOMC is generally a two-stage event where it will sweep one side liquidity and then reverse and then run for the opposite liquidity. I never ever trade CPI. And FOMC is generally stuff like this into your analysis and into your trade routine, right? CPI is usually a one-sided event where price just really takes off. And FOMC is generally a two-stage event where it will sweep one side liquidity and then reverse and then run for the opposite liquidity. I never ever trade CPI. Well, I used to, and I got my ass handed to me, so I've learned my lessons not to trade CPI. I do tend to trade FOMC if everything aligns. And again, what I'm looking for with FOMC is a two-stage event. If I have strong conviction that the market is likely to go lower, and then I see FOMC rip higher, running buy-side liquidity, and it comes into a higher time frame PD array or a higher time frame DRT level, I'm selling that. It's taken a lot of years of experience to understand how to trade FOMC. Right? And that brings me on to the question that I got asked about expectations and how long this should take. In my honest opinion, if you were to take, say, any indicator-based strategy and you were to apply money management and risk management, you can make any strategy out there work. The difference is you're playing a numbers game versus precision and understanding. And it was something that I am counted in my own game, make any strategy out there work. The difference is you're playing a numbers game versus precision and understanding. And it was something that I encountered in my own journey when I was studying ICT concepts. And I'm sure you can probably relate that there's probably been one point of your journey, especially in the beginning with ICT, where you thought to yourself, is this worth it? Right? Because there's a whole lot of information. And I went through this same dilemma where I was like, I can see that these concepts work. I can see the precision, but it seems like it's a mountain to climb versus doing something like an indicator-based system, right? Fast forward to where I am now, I am super, super grateful that I stuck with ICT. Yes, it's taken me longer. How long do I think it takes to actually start making money and become profitable in trading? In my opinion, around 4 years. I would say that it takes you maybe a year to 2 years to pick up the skill set of understanding how to read price effectively.
That's what I'm saying. Around 4 years to make money, consistently income, and I know that I believe, therefore I can get there faster. I'm gonna tell myself that it's gonna take 4 years every single day. I'm gonna tell myself, hey, 4 more years and then you'll be there. 4 more years and then you might be there. 4 more years, but I don't know. I feel like the time window to when people want it and when they think that they're going to get it is just absurd. Like, I used to think that I would get it within a month. I was like, yo, in a month I'll be making $1,000 a day. Like, dead ass, when I first started trading, and I feel like we've all done this, if anyone's watching this, but we've, I like made like $200 in a day in like one day, one time when I was trading options way back in the day. And then that was like my first month. I was like, if I could do this every single day, then if I were to do this every single day, make $200 every single day, I would have $10,000 by the end of the year or something like that. And then that's not how it works.
I think,
like, when people say I made $7,000 today trading, okay, but that could have just been one trade a week that you took, or one trade a month.
after 2 years, I was very efficient with reading price. The problem is because there's so much information, especially with ICT, Most of that time for your first 2 years is just spent studying. You're not really getting much chart time or experience. And it's the chart time and experience that makes you profitable. Of course, the studying is important, and the journaling and the backtesting is all important. But the chart time and getting actual real trade experience, I think that's going to take you 2 or 3 years of getting the experience and understanding yourself in these charts. And that's the same with any indicator-based system or any strategy that you're going to use. You can learn the strategy fairly quickly, right? But understanding yourself and gaining the experience, that is still going to require years worth of understanding, trading, getting actual chart time, and still journaling. The reason I say this is because there's a lot of people who come into the industry because they have seen people on social media and they make it look like it's easy. They're not telling you the truth about how difficult this industry is and how long it's going to take. You see all the adverts everywhere of saying, use our system and you get an 80% win rate and you become profitable in 90 days and blah, blah, blah. It's all marketing. If people are on social media and they're flexing their lifestyle, stay away from them. Right? There's a reason why I do not flex anything. I don't show anything, because what I have done and what I have made and the success that I have got is going to do absolutely nothing for you. But what I can do is help you understand price action. I can help you understand ICT by providing you with value, which is why across all my socials, I only provide value. Sometimes on Twitter, I might talk shit, but to be honest, I'm not really using that platform anymore. I just don't like it. It's X now, isn't it, right? Now, the reason I'm telling you this is because, number one, I want to be honest with you, and I want you to get into the right frame of mind early on in your journey that you're looking at 3 to 4 years. Anything that you do in life is going to require work. Try not to put a time limit on how long it's going to take you, because yes, it's different for everybody.
Have you watched all that? Yeah, I have. I just like recently finished it. I would say like about a week or two ago. Honestly, it's been like a week or two, and then I think like maybe just like a week ago. If that, if that, I was grinding it for a minute. It's like I was pretty much just doing what I have been doing on live stream, but I just haven't been doing it live. And then I was like, low key, what if I just go live and just pretty much just backtest and study like on stream, and then maybe that will help leverage my YouTube. And that's what I'm doing. Nice, nice. It's good to hear. Probably luck though. I mean, you'll see. I would just say stay consistent, and if you're within your 1 to 2 years, 1 to 2 year mark of trading, like Ali Khan's saying, I honestly am not satisfied, or I don't care about any of the success that I would have within my first 1 or 2 years, which is why I'm not even trying to take a trade right now. I'm just taking time, and that's why I think I'm going to give myself a whole another year just to backtest, reprice, and not even take a trade, because I think that's going to help my mental so much. And then once I get into a live account, I'll just be like, I'll be emotionless. I'll be emotionless. I will have zero emotions. Not even a single smirk on my face. I'll just be sitting there. I'll be like, next, next. Like that's what I want to be. That's what I want to be. Just take a trade, sitting there. Like I saw this one guy on Instagram. I think it's called like SMT Trader or something like that. You guys have probably seen him if you look at social media, but he's just like the whole time throughout his trade, zero emotion, not one, like not even like a peep. I don't even think he even spoke. He just completely emotionless. That's what I want to get to, because I definitely do have emotions, and even if I don't, even if I'm just like trying to be calm, I still have like emotions like deep down, and that's what I want to get to, and that's gonna take a lot of desensitizing yourself and a lot of patience, because not everyone can do that. So therefore, it's gonna take a lot of patience and desensitize yourself, which is what I'm planning on spending this next year on. And okay, I'm willing to sacrifice a year, 2 years, 3 years, 4 years just to get to that. What's your strategy? I currently am trying to find my model, but I would say I do like the market open, and I like to look at the Judah swing. What does the Judah swing do, or what does market open do? and then possibly trade the 950 macro, or possibly trade the 930, or possibly trade the 1050 macro. But overall, I'm looking for a market maker model because that's how the market moves. I'm looking for low resistance liquidity signatures, and I'm looking for market maker models pretty much. I've just been tape reading, Liam. I've just been tape reading. By the way, backtest is completely different compared to actual trading. I recommend buy a funded account. I'm giving it more time. Are you an ICT son? Wait. Oh my gosh, bro. That's crazy. I can market. I didn't even think about that. Wait, is Caleb the one that started his channel? He posted something in his community. Oh my gosh. Bro, so many people probably think I am ICT's son. Or not actually, but that's funny. I never thought about that. Cause like, look. So like, I maybe I am. I'm the ghost in the machine. I don't know. I feel like ICT son's gonna be a... That's funny, bro. Juice swing has hardly happened this year. What do you mean? The Judas swing? Okay, let's look at the charts. Let's look at the charts real quick. That's I never thought about that. Cause yes, you had alright. Judas swings at 9:30. Here we had 8:30 news. It's probably not gonna be a Judas swing. There wasn't a Judas swing there. I guess here we had expansion off of market open. 9:30 here. Here's a Judas swing example. I mean, it's not always gonna be like a crazy Judas swing. I'm here. Where's the market open? Market opens right here. We come back. We sweep sell side. Then we come back up. Take buy side into this imbalance in this balanced price range, and then we seek sell side delivery. So that's a Judas swing right there. Should I change my last name to Huddleston? That would be insane, bro. that would be like the I wouldn't do that though. That's just like that's just weird. That's just weird to do. Caleb Huddleston. If I did that, and if I had my, maybe I am ICT son. We'll never know. I should take my name off my YouTube channel. I should take my last name so no one will ever know. Or maybe my last name is just Sutterfield and I still am ICT son, but my last name is just Sutterfield.
Some people do it sooner.
All right, let's get back into the lecture. What do you think if you were to make a channel, what do you think his first video would be? Like, I'm ICT son, or like ICT son? What do you think his son's like? What do you think his son's like, if we're being for real? You get noticed by ICT real quick once he tries to pick a channel name for his son. Can you imagine? ICT flies me out. Have a little beverage. Nah, I'm gonna be yeah. I low-key think that I have a conspiracy that ICT at some point will know my channel. At some point. Like, if I keep on being consistent with it, at some point ICT is gonna see my channel. Especially if his son's name is Caleb. In your opinion, what's better, 2022 or Silver Bullet? I personally like looking for this. I like the Silver Bullet, but I would say, I don't know. Who cares what my opinion is? Who cares what my opinion is? It's all about your opinion.
Value. Sometimes on Twitter I might talk shit, but to be honest, I'm not really using that platform anymore. I just don't like it. It's X now, isn't it, right? Now, the reason I'm telling you this is because, number one, I want to be honest with you, and I want you to get into the right frame of mind early on in your journey that you're looking at 3 to 4 years. Anything that you do in life is going to require work. Try not to put a time limit on how long it's going to take you, because yes, it's different for everybody. Some people do it sooner, and I know some amazing traders that has taken even longer, like 6, 7, 8, 9 years. They just didn't give up. That was the difference. That is the difference in anything. It's why did somebody become successful? Is because they didn't give up.
I'm gonna be straight up. If it's taking you 9 years to become a successful trader, I think that's like some serious mental baggage that you have within yourself. You know, that's what I think. And the thing is like being a profitable trader is like, it's really not like insane. All you need is a 2-to-1 risk reward, and you're winning 40% of the time, and you're profitable. You're winning 40% of the time. So 4 out of every 10 trades that you take, you are winning. So you're losing 6 trades out of 10. And if you have a 2-to-1 risk reward, you are making money. You are technically a profitable trader. That's why I get paralyzed by that, and I assume that being profitable means that you're just perfect, and you're like ICT, like you're extracting millions of the markets. And to filter your trading days. Yeah. But I think like Loki, a profitable trader isn't anything that's like out of reach for anyone. No, it's just more about staying consistent with what you do, with your approach to trading, which is what I don't do, which is why I'm not in a live account right now, because I need more time to develop. There's nothing wrong with that. I'll admit that, and I want to inspire others. I want to like shine light on the fact that like you're not there right now. Cool, bro. Give it time, and we'll just put in work, because I know for sure, for certain, people are just trying to rush this process. So many people just try to rush it. And those are really the ones that give up, but they also don't give up because they feel like they're too far in a hole of something, and they treat it like gambling, and they're, back at it again, just lose my account. Oh, I just blew my funded account. And now I'm gonna go and buy a new one. That was like me when I had a straight up gambling addiction. That's why I'm not doing that anymore. That's why I'm not doing that anymore, because I had a straight up addiction, bro. And I'm not gonna let that transpire to my trading, because I've already made those mistakes. I know that, like, we as humans are kind of stubborn. At least I am. At least I was, and therefore, like, we want to see things happen to us instead of just listening from others that have already gone through that. And the power of today's day and age is that you have access to information from other people that have gone through those things. So therefore, you don't have to make all those mistakes that other people have made. But you can also experiment on yourself. You can figure out yourself. Monday red news event, early high or low of the week possibly. Okay, let's look at the charts real quick. Let's look at that. Should we do like a little ooh. Let's do like a weekly forecast. Let's do a weekly forecast real quick. I'm going to record it and I'm going to post it. Let's do a weekly forecast. I was going to put on some music for me. I want to look at this IPTA. If we anchor this back to the first trading day of this month, this just looks so bullish. Like I was expecting to see like if we wanted to put in a top here, we likely would have done it around this. Let's look at the standard deviation from this fulcrum point here. Ooh, so we have gotten a -1 standard deviation, so this is kind of an area to look for. A possible rejection if we are to reject here. But overall order flow just looks extremely bullish here. It does not look like we're trying to reject any of these highs. All right, I'm gonna start recording this, and then we're just gonna go top down. We'll start with dollar, and then we'll low-key like look into like some. I don't really want to look into commodities unless if I haven't analyzed them. But overall, dollar. Let me clean up this chart a little bit. We have came into premium of this range here. We're having around equilibrium, definitely in the consolidation. All right. All right, welcome. Here we have a weekly forecast. I'm gonna do these every Sunday or so, but basically we're just gonna go over the top, or we're gonna go over the bias in the next week and what I'm kind of looking for, what I'm kind of expecting. So as always, we're gonna start on dollar, and I'm just gonna do like everything just cause. But we're gonna start with dollar. As you see on dollar, as we know, we've just been in a monthly consolidation. Pretty much just a monthly consolidation. As you see, we have this order block high that we've just been meandering around, and we haven't caused explosive up movement here. As you know, this year as well, we do have an election. So therefore, I'm holding to the theory that we're likely just going to be in a consolidation on the dollar until the election, and then we're probably going to have a manipulation move around the election time. Now, that's the theory that I'm subscribing to and that I'm holding to. So we'll see if that is the case. If it's not, then that's cool. If it is, then that's cool. So basically what I have here is the dealing range here. As you see, we're just hovering around equilibrium. We have come back up into a deep premium of this range here. And now we're kind of rejecting and we're heading back to equilibrium of this range. I know there's a lot of this on my chart. I'm gonna remove a little bit of this. But basically, right now, we are in a heavy consolidation. And we have come to equilibrium here. We've kind of had a decent stop out here, and now we've come up to this order block level. Yeah, we come to mean threshold of this order block, it looks like. And now we are rejecting off that, and it looks like we have had seven or so previous down close candles here. If you look on the 4 hour, what does this structure look like? This looks like we have bearish market structure here. Overall, if we measure, let's measure this dealing range from this high to this low. We're now coming back to an equilibrium. So I'm just expecting and anticipating to see a consolidation around this within a deeper consolidation within a deeper consolidation. So I don't really have any expectations on the dollar for this week. But overall, if I were to look at this, we have this order block. But I would even want to see this traded to. We did reprice right back up to that wick there. So if we are bearish, I would like to see just repricing lower to these equal lows into here to maybe have another stop hunt. But overall, if we look at the structure is bullish on the higher time frame, in my opinion. But I just think that we're really just consolidating, and there's not really much to really get out this except for we're probably going from a deep premium back into equilibrium, maybe into discount, maybe into this order block. I have had my eyes on this level for quite some time now, and I think that we could actually be working our way to that level here. We have that order block in line with that fair value gap. I think that we might want to head there. We might want to head there and then displace higher to take highs, but we also could just be engineering because we have election this year. All right, let's head into NQ. So we look at NQ. We look at the weekly chart. Overall, what is underlying order flow? It is bullish. We've had 2 consolidation candles, and then we had our weekly expansion here. As you see, why was this a good expansion? Why would this is classic. This is just beautiful, beautiful, beautiful. As you see here, we have a fair value gap that gets formed in the market. And then we have a consolidation candle here. We have a big wick on this candle. So we know that this fair value gap is a likely potential draw on liquidity here. So then what do we end up doing? We end up coming back down to this fair value gap, and then we provide expansion on the next candle. Notice what we've done here. We put a swing low in the market. So I don't think that there's any stopping on NQ. I would assume to have more bullish nature as DXY possibly moves into that sell side liquidity pool right here and then into that order block. So I want to see, hey, are we still bullish here? Do we want to continue to break new highs and make new highs? Obviously, we are in all-time highs on NQ, so the only thing I really have to go off here is standard deviations. We are at a -1 standard deviation, so I'm just going to expect and anticipate some measure of consolidation on NQ no matter what, especially in Monday, Tuesday, just because of where we're at. I mean, there's not really much. Like, we just had expansion, 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 expansion. Like, this was a classic bye week. So, therefore, I'm really kind of just not as interested as trading NQ as I would be at other times within the market. As we see ES, it's kind of the same thing. If we zoom out to the weekly, what have we done? It's important to know that ES actually never traded into that weekly imbalance here. So ES has actually left this as a possible draw on liquidity for later on, not now. I don't think now is the time. I don't think now is the time. As we see here, we have standard deviation. Where could we possibly reach for? I think -1 is the likely objective for ES. I'm just going to continue to submit to this bias until something gets proven wrong. As you see here, let's continue to make new highs. I do want to bring up this IPTA data range. If we see this IPTA data range anchored on the first of the month, where's the salient liquidity for this month? And as we see, we've blown all those objectives here. And where can we possibly do some things at the 40-day and 60-day highs? So in terms of a long-term macro view, I think that this around July 20 or around August, we could shift bearish sentiment. Actually, I want to pull up something real quick because I believe I have this is the YM seasonal tendency. As we see around July, we have some form of decline that we like to see within the market. So there is a seasonal tendency for us to maybe put in a top, but with this current market structure, I would have to see more significant information for that. As we see, we've taken this high, and after we've taken this high, we've created a fair value gap. That doesn't seem too bullish to me, or it's too bearish to me. That seems like a bullish signature. We've created a fair value gap above that high there. So I think it would take a lot of momentum for us to really get any significant swing lower within the market. We've had accumulation, manipulation, and then distribution. It would have been better for a bearish sentiment with the next upcoming weeks if we had accumulation, manipulation, and distribution, in my personal opinion. But also, this could just be accumulation. I don't think so. We'll see. If I were to be bearish, I would want to see fair value gap into this PD array, into there's not really any other confidence I can really use besides maybe YM or something else. I would like to see fair value gap in, fair value gap out signature to signify that we want to see lower prices. Until we get that, it's still going to remain bullish. So let's look at YM. And sorry, I got a lot of this on here. As you see, we have been just consolidating on YM. Let me pull up YM. Okay, here. Actually, we're gonna go back. We're gonna use this chart for the weekly chart, but then the other. As you see on YM, kind of just lackluster movements here. A little bit. There's non-interesting, and I'm not gonna lie. Non-favorable. As we see, we had the stop hunt here, and then we had the big wick showing that we possibly want to head to new highs. We came short, claimed this rejection block, headed lower. We have this order block here that I do want to grade. Hold up, I need to see if we grade this order block, we could get possible gradients to where we could respect, and kind of just lackluster. We've definitely just been consolidating on YM. We've reached for this daily imbalance that I was looking for. So we've reached that daily imbalance. I want to see, hey, do we want to trade up to these order block objectives here? I think that's what's the most favorable draw on liquidity for me, is that order block right there. And then once that gets taken, I kind of have to have a little bit more assessment with YM. Overall, I'm not really incorporating YM too much in my analysis because I mainly trade NQ. But as you see here, we've had this big dealing range right here. We've taken both buy side and sell side, and we kind of just been consolidating. We've gone from discount to premium, back to discount, back to equilibrium. If we look at this price leg here, we also have another dealing range here to where we're kind of around equilibrium of that dealing range. So we could possibly see more consolidation, more accumulation on YM. If we take this big dealing range here, which I know it's kind of not the cleanest because it's the current contract code, we are within equilibrium of even this previous leg here. So I want to see, hey, is this a stop hunt that we want to have around equilibrium, or do we maybe want to have another stop hunt, or do we maybe just want to just keep on consolidating here? So I want to see, to be bullish, I would want to see displacement higher now, or I want to see some form of another measure of stop hunt. But I feel like the stop hunt that we've had here has been significant enough. Ideally, I would like to see a breakout of this dealing range here. Not that I'm looking for breakouts in the market, but we've kind of just been held captive within this dealing range here, this high to this low. Till we break out of that, I don't really know what we want to do, but we can make informed decisions here. As you can see, we have taken sell side liquidity here. We've repriced this order block right here into this imbalance here. And we've had a big wick on the hourly. So we've now created a swing low within the market right here with a big wicks within the market, big wicks right here. So I favor more upside potential on YM. So that's going to hint at more upside potential on NQ and ES. So that's kind of the idea that I'm holding into the upcoming week. All right, let's look at Euro USD. As we see, Euro USD has been tricky. As you see, since the dollar has been in consolidation, therefore Euro is likely going to be in consolidation too. So if we look at this, from this dealing range high to this dealing range low, we're now are kind of displacing above equilibrium of this. So we're creating fair value gaps above equilibrium. So I want to see, does this area offer mitigation if we want to trade back to it? Are we going to offer mitigation here to possibly head higher, displace higher? I would not want to see, if we were bullish, I don't want to see this fair value gap get traded to at all. So I want to see this be a breakaway gap if we are bullish. So let's just mark that in right now. I want to see this possibly be, or if I do not want to see this get traded to at all, if we want to see new highs. So basically that's what I'm looking at on Euro USD. And if we look at GU's been more bullish, I would say. We've had this weekly imbalance here. I'm gonna get constant encroachment. Where's constant encroachment? Let's map out that level. Look at where consequent encroachment is. Middle line here. Where the body's respecting. Constant encroachment of this imbalance here. We also have this high right here. Act as mitigation. Look at the monthly chart. I believe there's this monthly order block level I want to mark. And I thought I had this marked out earlier, but this monthly order block is exactly what we end up respecting, and we end up having displacement here. We just had a big expansion candle on the weekly, so we could see some form of consolidation and maybe a little bit of retracement here. But overall, maybe we get a Monday, Tuesday low week, create a fair value gap here, and then maybe just Thursday high week caps the range. And then Friday, we kind of just consolidate. And then the next upcoming week, we trade back in that fair value gap and seek to expand higher. Those are all possibilities of what could happen and what could unfold. So I want to see what happens. I don't trade Forex, but it's just something that I'm going to implement into not implement into my analysis, but just analyze just to get better with price action. So as you see here on NZD USD, if we look at the monthly chart, let's look at the 3 month too. We had this order block right here. Are we in mean threshold of that? Mean threshold got respected perfectly, and we actually have 75% of that order block right there. That'll be interesting when we drop down. And then we also have this monthly order block right here that we're kind of within that. And right now on the weekly chart, kind of just consolidating. But what do we have here? Low resistance liquidity signature after we have after we have taken rejection block here. I'm not interested in the wick because the volume occurs within the bodies. We've taken the bodies there, displacement up, fair value gap in, fair value gap out, down to mean threshold, down to 75% with low resistance liquidity signatures here at the highs with an imbalance above market price that likely will want to get drawn to. But the only reason why I don't think that this is as good of a draw liquidity because we have buy side delivery here. So if buy side delivery was up here, and we never had this buy side delivery all the way down here, then I think that this would be more favorable to get repriced to. But overall, we do have a nice imbalance above market price that could look to get rebalanced at some point within the future. And if we look at this, we have a weekly imbalance that we've drawn into at 75% of that order block on the 3-month. And then here we have that daily imbalance now transposed. It's also a daily imbalance here. We've had a maybe SMT here. I'm not going to really analyze that too much, but here we have a nice institutional order block. I would assume that we might have SMT with something here because this order block it looks like an institutional order block. Do we actually end up repricing to that? I want to look at this. What's the high of that candle? 0.59804. What's the low of that candle? 0.59813. So 813. I don't think it actually does. Oh, I could have just zoomed in. Alright, and here we have, so we never actually came to that order block. Here we have a nice mitigation block. I think I was talking about in the next review. But overall, this looks pretty bullish. I mean, I would not assume that we would come back down to new lows. If we were to come back down to new lows, then I would assume that we might be wanting to run all the way down here to these lows. But I honestly don't see that happening. I think this will likely hold as a market maker model here. We might need a little bit more time here within this model, but I want to see new highs. I want to see new highs for sure, and I'm pretty bullish on this pair. And I see Australian dollar, kind of the same thing. We have this order block now that we've now reclaimed, kind of using it throughout this price action here. Look at the weekly. I'm not really gonna analyze this too much because I don't know too many. I don't know the technical side of things. I don't know any interest rates. I don't know any COT data. I don't know any of that sort because I don't trade forex, so I haven't really spent my time looking at that. So therefore, I'm not gonna get too much into forex analysis. But just based off price action, it looks like we want to go to this imbalance right here. So I'm just gonna draw in that imbalance right there. Here on euro pound, I'm not gonna look at that. Here on UCAD, we will look at though. What level is that? That's gotta be a weekly order block or something. As we see on the 3-month chart, we've swept liquidity, we've displaced higher, bullish order flow. We've had a bullish fair value gap here, and now we just consolidated here. And now it looks like we want to maybe break this consolidation here. We have this level here that isn't of significance right now. Monthly chart. Come down to this imbalance here, into this high right there, get supported. Overall, I'm looking at this candle high right there. That should support. I'd rather look at this candle body though, but we never come back down into that. So, or I'd more look for this candle. Sorry, that candle body right there. This is the lowest down close candle that engages the fair value gap. So this is a true order block. This is a true order block right here. As we see, we pretty much repriced to that very nicely there. We don't actually end up touching it. If we look at this, it's just straight consolidation. So until we break out of this, or until we show displacement, I'm not going to be able to analyze this. But I want to see. I would have liked to have seen, if I were to be trading forex, I would like to see more displacement lower first, and then I would like to see it repricing higher. Let's look at oil. Let's see, oil has drawn into the objectives that I was looking for. Kind of a nice little model there, eh? Look at where we reaccumulate at. Oh, right at that mitigation. I kind of want to look back in the previous weekly outlook to see that, but yeah, I don't know where this buy side liquidity is really anchored on, honestly. Oh, is that consequent encroachment of that monthly wick? There's no way I was doing all that. There's like, let's be honest, there's no way I was doing all that. No, it's not. But as you see, we have consequent encroachment of this monthly wick. I still am definitely bullish on oil. I mean, underlying order flow is bullish, so I would assume that until we come up to this high. We also have this area of previous mitigation that we have tapped into. Let's also look at this dealing range high and this dealing range low. We have 75% here, so I want to see us maybe come back down. And honestly, this might be what could transpire, but I don't think so. If dollar's bearish, then we likely will get a push to buy side. But let's just say if we come back down, we could accumulate around this 50% and come back up and then use this 75% as a means of silver bullet. Overall, I would assume that we would reach higher prices, but we could do something of that sort. So let's look at gold. I did analyze gold the other day on stream. I was live for a long time. If you ain't pulling up to my streams, then I'll be live every single day. If you're watching this video, I feel like that's your real one. Basically, we have SMT here with I think platinum. I don't know. I don't really trade gold, but we had SMT here, displacement. So I would assume that we were gonna run to this imbalance here. I believe it's a 4-hour imbalance that I highlighted. Yeah. So I'm definitely looking for that imbalance there. Other than that, maybe let's look at Bitcoin. Let's look at the downfall of Bitcoin. Ooh, right here. Let's look at Bitcoin. This could be interesting here. We could have another little bull run, maybe. No, I don't like to look at Bitcoin, honestly. I was looking for this to be a market maker buy model, but we end up coming up to this rejection block here. And also, it's Bitcoin. It's Bitcoin. ICT doesn't suggest trading Bitcoin, so I'm not gonna like to trade Bitcoin, and I really not. So we come back down to this imbalance right here, sweeping this low. I want to see if we get fair value gap in, fair value gap out, kind of like this signature right here, to look for short-term bullishness to maybe these highs here. Overall, I want to see, we're likely just going to consolidate here. And I don't want to do any deep analysis on it because it's Bitcoin, and I don't think it's that anything crazy. As we see here, we kind of have this gap right here at 25%. We have this gap around 50%, and then we have this inverse around 75%. So I ain't really going to do any of that analysis. I do want to pull up Tesla because I was actually in a Tesla position. I ended up selling it here on this day just to claim my piece of the pie. But as we see, I've been outlining this for a while, and I want to see this become a soup. I honestly feel like we're definitely going to head up to these highs here, but I've never really traded options like that, and especially if I'm trading with my real money. I'm just going to look to kind of just experiment with that, and yeah, that's that. And the only reason why I did trade it with my real money is because I had like a year out in advance call option, and that's why I did that. Normally I would not advise to do that with real money, but basically that's what I ended up doing. I just see stocks just look pretty bullish here. We have put in a swing high on Nvidia, but I don't think that's anything. AMD, we have a swing high here. It's where if we see bearish shift here, AMD I think would be the first one to see these lows. All right, anyways, that's my weekly outlook, and yeah. Man, I got terrible outros. Holy, oh my gosh, terrible. Alright, I want to do like a little backtesting recording. I will be live for backtesting tomorrow as well. Been backtesting. I think I'm gonna change my name to Caleb Huddleston. What platform is that? The news, Was that is that the video I want? Alright, screw it. That should be the right video. If it's not, then I'll. Work back. Alright, so weekly outlook has been taken. Alright, let's finish this lecture. Dang, bro. I don't know how long I'm gonna be live today. It was all a dream. I used to read Word Off magazines.
They got their arse kicked in these markets just the same way as you did, but you gave up and he didn't. Do you understand? Often when people ask me how long does this take, it's because they need rewiring, because they're already trying to rush the process. And over the years, I've seen students come to me with the same exact thing. When will I start making money, or how long is this going to take? And 90% of the students who ask me that question quit within the first year. So I hope that answered your question, and I hope somebody else took something away from that. Anyway, let's get into the charts. So price action hasn't been great, right? And again, we are in a longer term consolidation, and that makes the lower time frames much more difficult. I explained this in last week's lecture. Now, why is price difficult? Why is price choppy? Well, if you followed me for a while, and especially my private students will know that I always refer to the yields, right? So I'm looking across at the bond market because the interest rates move everything, right? And specifically, I'm looking at the yields, which is inversely correlated to the bonds. Now, in front of you, I have the 10-year yield price. And I just want to go through this chart and explain the reasons of why we're seeing asymmetrical markets and choppy markets right now. So here we have our DRT levels. Already you can see how we're staying between the 75 DRT and the 50 DRT. So we're in the upper half inside of a premium relative to the dealing range high and the dealing range low down here. Currently, we are consolidating inside of this buy-side imbalance, which sits around equilibrium of...
Oh yeah, we definitely want to just consolidate, I think, for a while here in the bonds. Wait, how do I get a ZB? We went back to 25. So let's see if we go back to premium. Oh, nice monthly order block right there. Very nice. Very nice after sweeping liquidity and about rebalancing that. So bonds going higher means stocks going higher. But is this a yield?
Of our dealing range. Now, this is on a weekly time frame. If you notice the bodies of the candles being contained inside of this buy side imbalance, and we're just having.
Oh, I think I'm looking at the wrong thing.
Wiki back and forth price action just running stops on both sides. This is really seek and destroy, and again my students know, and I've been saying this for a long time, that seek and destroy profiles are likely to occur at equilibrium, and they are notoriously difficult conditions and environments to trade in. If we are in a consolidation on the yields, then we're likely to see consolidated prices on the dollar index, right? Because the dollar follows yields, and this is why I look at the yields, because it's easier to draw the correlation between dollar index because they both move in the same direction, whereas the dollar index is inversely correlated to the actual underlying bonds price. We've swept buy-side liquidity above this high and tapped into the upper quadrant, which is our extreme premium, and we've rejected from the consequent encroachment of this sell-side imbalance. We've also completely rebalanced this buy-side imbalance down here. This is very, very difficult to trade, and from where we are, price can go in any direction. If I can make a case of both sides of the market, then I sit on my hands and wait for more information. This is one of the best pieces of advice that I ever had from ICT. I would favor higher prices from here, but when I look at the triad, so the 5-year, 10-year and the 30-year, I'm not seeing any cracking correlation that I would like to see that would give me more of a directional bias, right? So this is why when we are in this kind of consolidation or a seek and destroy profile, you're going to get markets that move out of sync. If you look at the euro and the pound, for example, right? Anyway, moving on, we have the dollar index here on the daily time frame. Now, we've been consolidating inside of this buy-side imbalance. And again, price here is very difficult to read. I've already identified the major buy-side liquidity above these relative equal highs and these relative equal highs here, as well as this liquidity void. Ideally, I would have liked to see price run lower to upset the trend line, and generally when I see a trend line, I like it to touch the midpoint, which would be down here, and below this we have this low and this buy-side imbalance over here as well. Obviously, it doesn't need to get down there, and what I expect in the market doesn't care about that, right? Obviously. So if my expectations don't pan out, then I have to sit on my hands and wait. Let me zoom into this piece of price action here, and we can see this in a bit more detail. Before I forget, I did these slides this morning, right? So this is Monday's trading. Now, usually I make my slides on the weekend before the market opens on Monday. But this weekend I was too busy to actually create the slides, so I've created the slides this morning and I'm currently sat down recording. You can see here that we are again here in a seek and destroy, where we're just running highs and lows. I am interested in this volume imbalance here inside of this order block. I want to see if we can reject this area. We're currently rejecting it as I'm speaking, and I am noting the equal lows left down here. In this piece of price action, we have major buy side liquidity above the relative equal highs, and we have the major sell side liquidity below this swing low. Now again, I feel that there's a lot of sell side liquidity down here, and I would rather see the dollar move lower to upset that trend line before continuing higher, because then we've unseated all the buyers, and I would expect smart money to pair that liquidity to then run for the sellers and the buy stops above the relative equal highs, right? But until I can see something more convincing in price, this kind of climate is going to be more suited towards intraday scalping. Now, to pair that liquidity to then run for the sellers and the buy stops above the relative equal highs, right? But until I can see something more convincing in price, this kind of climate is going to be more suited towards intraday scalping. Now, I do like how we have run into an extreme discount relative to this dealing range from this high to this low, and we've swept sell side liquidity below this swing low and then run higher and closed above this swing high. We do have buy side liquidity above this swing high, which sits below an extreme premium. So again, we could just knock about inside of this range, and it could be held in this consolidation for a while inside of this range. We don't know. And again, this is what makes Forex very challenging at the minute. If I contrast what we can see on the dollar index with the euro dollar, the first thing that I notice is on the 9th of April, we have this high and we have the equivalent low here on the dollar index. So the range from this low to this high is the equivalent range on the euro from this high down to this low. Now you can clearly see that we've already run the major buy side on the euro dollar.
SMT
to run that major sell side.
SMT, right?
Low on the dollar index, right? So this is already.
We didn't put this SMT though.
Already suggesting that the dollar has strength behind it and doesn't want to go lower. We can also see how we gapped below this swing low here and closed below this sell side imbalance, leaving this liquidity void, right? So this is an actual gap. I can't see any further imbalances inside of this dealing range. We do have this swing low, then obviously the major sell side if we want to continue lower. If that were to happen, I would want to see euro potentially run higher to fill this gap, reject from the consequent encroachment of this buy side imbalance, and we also have these consecutive up close candles which would act like a bearish order block. I'd want to.
Ooh, low key that could change my little bias. I put. I don't think so. I don't see his. What data feed is he using? I don't have that. Wait.
See some form of displacement through here to give me conviction that we're likely to run the lows down here, and that would mean that the dollar index will draw towards the relative equal highs and that liquidity void to the left. If we look at last week's price action on the dollar index, here we're on the hourly time frame and we have Monday through to Friday delineated with these blue vertical lines. Now already you can see where most of the price action was contained, and this is again typical for non-farm payroll week, where we're going to see consolidation early on in the week. These DRT levels are the same DRT levels from the 4-hour time frame that I spoke about in last week's lecture, and we've consolidated in an extreme discount relative to that dealing range, right? So between 0 and 25. Monday would be a trading day, considering it's non-farm payroll on Friday, right? So that's the rules that I use when trading Monday's price action. What transpired here on Monday? Number one, you can see how we ran above this swing high, sweeping that buy side liquidity and tagging the equilibrium midpoint of the dealing range. We also rebalanced this sell side imbalance that sat above the buy side
Or shoot. Previous 4-hour dealing range. Oh, it's from here to here. That's what one he had. We touch equilibrium with that? Is that? Oh, he used this one, I think. Yeah. Oh, yeah. Taking buy side with that for value gap with relative equal lows here.
liquidity. So what is the algorithm doing here? It's killing two birds with one stone, right? This becomes a very strong draw on liquidity. This up close candle that rebalanced this sell side imbalance and sweeping above this swing high is the order block. When we run through the opening price of this up close candle, this is our change in state of delivery, where we went from a buy program into a sell program. The up candle that rebalances is important. It becomes a high probability order block. So there's two things that classify as a high probability order block. There are others, but the two main things are the candle that sweeps liquidity or the candle that rebalances.
Ugh.
Again, because they are the two primary functions of how IPTA moves, right? Reprice to inefficiency and reprice to liquidity, right? Again, notice how we ran into the 50% DRT level. You can see how the bodies of the candles here have failed to close meaningfully above that sell side imbalance, and also they've closed below that 50% DRT level. And you can see how we tap that here and then roll over. If we take the swing low to the swing high, which was our initial buy program, and we project 2 standard deviations lower, we get a level of 1.
Yeah, I have like off stream, but I also was watching this yesterday, and I'm on his episode 6 of his mentorship. So yeah, I was watching his mentorship yesterday. So when he was saying high probability soups, it would be like this because we're taking a previous stealing range.
103.993. If we extend that out and we take the exact low of this candle, comes in at 103.993. Highs and lows are mathematically derived based on buy and sell programs and swing points. And we take the exact low of this candle, comes in at 103.993. Highs and lows are mathematically derived based on buy and sell programs and swing points. Buying and selling pressure is not what is moving the markets. The markets are moved based on a mathematical formula, right? We multiply this range by 2 going lower, which actually gives us our low of the week. Price is contained inside of this range from this high down to this low for the remainder of the week. And then on Friday we have non-farm payroll and price really takes off. You can see how we gapped open on Sunday. What are retail looking at here? This is a head and shoulders pattern. So they're waiting and anticipating the break below the neckline, and obviously smart money had different ideas. Notice how we have really small ranges and small candles prior to the large range. They're holding the market here in a small tight range prior to non-farm payroll to engineer buy-side liquidity above these highs, and these highs up here. And then they run Monday's high on Friday. So anybody who was short from Monday, their stops have now been smashed. Let's take a closer look at Monday, and we'll go onto a 15-minute time frame to see this in a little bit more detail. Here we have a nice example of the power of 3. Now, there are a lot of caveats to the power of 3, and I'm going to go into more detail about the power of 3 during the summer bootcamp. But why power of 3 is so effective is because it gives us a filter, right? That filter is the opening price at 12 a.m. midnight New York Eastern Standard Time. Now, if we are going short, we want to sell above the opening price, and if we are going long, we want to sell below the opening price. Now, let me add the London session and the New York session. Firstly, you can see how price was consolidating and staying inside of this range, building a pool of sell-side liquidity below these lows. What sat below these lows? Let me add the power of 3, and I'm going to go into more detail about the power of 3 during the summer bootcamp. But why power of 3 is so effective is because it gives us a filter, right? That filter is the opening price at 12 a.m. midnight New York Eastern Standard Time. Now, if we are going short, we want to sell above the opening price, and if we are going long, we want to sell below the opening price. Now, let me add the London session and the New York session. Firstly, you can see how price was consolidating and staying inside of this range, building a pool of sell-side liquidity below these lows. What sat below these lows?
Sell stops.
This buy-side imbalance. Again, the market will move to kill two birds with one stone. In London, we drop, creating a swing low that swept the sell-side liquidity below these lows and rebalanced this buy-side imbalance here. Price then runs higher, closing above this high. We then create this down close candle right in the heart of the London session, which runs into what? These two consecutive down close candles here and the opening price at 12 a.m. Price then displaces higher, leaving this fair value gap and running above the relative equal highs up here. We find support inside of this gap and then make a run higher, just coming shy of that equilibrium level from the higher time frame. If we take this swing low and this swing high, and we project deviations higher, between 1.5 and 1 deviation we get 1.25, which is in close proximity to that equilibrium level, and it comes in at 104.767. The actual high of this candle comes in at 104.767. Now, what are we seeing as we're making this high if we bring in intermarket analysis? Well, as we were creating these higher highs, if we look at the British pound, at the same time as the dollar index creating these higher highs, we're failing to go lower on the British pound. In fact, the British pound is creating higher lows here, right? And since these are inversely correlated, we would expect the pound to make lower lows as the dollar's making higher highs. Now, this is a cracking correlation. This is a valid SMT where price has come to a higher time frame key level. We then see price reverse, and at the beginning of New York at 7 a.m. you can see how we formed this sell-side imbalance. We can see price run higher and touches it here, digging into that sell-side imbalance, but the body's closing below it. Again, this suggests weakness. Not only that, we also have this down close candle inside of a previous session, which overlaps with this sell-side imbalance. You can see the consequent encroachment of this distribution block. We nail it there really nicely before displacing lower and closing back below this swing low. Now that we've closed back below this swing low, we do not anticipate price to run higher back above this high and into this sell side imbalance, because this becomes a breakaway gap. You can see how we've left another sell side imbalance here. Price runs higher, nails the consequent encroachment, closes back below this swing low, leaving another sell side imbalance. Now this sell side imbalance, if we extend to the left, you can see this acts as a balanced price range. We have sell side delivery here, buy side delivery here, sell side delivery back through it, and then we act as a brick wall. So we've repriced lower, we've redelivered higher, we've rebalanced back through that range, and our price is balanced. Now this candle running above this swing high into that sell side imbalance and into the balanced price range occurs just before the 10 a.m. manufacturing PMI.
We backtesting ICT? Yeah. Yes, sir. I've been more like studying than backtesting, I would say, but I would say studying also is backtesting, you know. I'm not like actually like backtesting per se, but like I am backtesting, you know.
Now, this goes back to the question where do all news events cause manipulation? In this case, you can see that this is a market maker sell model, right? The manipulation occurred earlier on in the day, and we had our turning point over here that was
That's the standard deviation we was talking about earlier.
further confirmed with the SMT divergence. Now, this swing low hasn't been swept yet. We're still inside of the range from this low to this high. The manipulation occurred earlier on in the day, running the equal highs to the left over here. We then had our change in state and delivery, and price ran lower prior to the ISM manufacturing PMI. So we're already in close proximity to this swing low down here. We've already seen price run buy side liquidity, and then the candle prior to the numbers being released, we run into our sell side imbalance and our balanced price range. So when the ISM manufacturing numbers hit, price really takes a nosedive and acts as a continuation of the existing sell program that started up here, right? Notice where this swing low comes in, right in the heart of the London close, which is from 10 a.m. till 12 p.m. Yes, price does drift after this, but I am not interested in anything that occurs in terms of price action after London close. Now, the best setup will occur in the upper 50% inside of a premium relative to this dealing range low and this dealing range high. Notice when we came into that distribution block and into the sell side imbalance, we had also dipped into a premium and was in close proximity to the opening price. Now, this would have been the best entry. If I were to trade this, this would have been the ideal entry. My stop would have been above this candle's high, because we also have another small sell side imbalance here. But above this candle's high would have been a good stop, because we're also sat above that 75 DRT level. The bulk of my position, if I'm being honest, would have come off here. I would have taken another partial here, and then I would have left a runner to see if we could get the low form in London close, right? Generally, we're forming the high of the day around London and the low of the day around London close in a typical sell day using the power of 3. So I think that will be all for today. This may come out a little bit later since I've only just done the slides. I still have to edit this once I finish recording. Generally, I'm aiming for Monday 9 p.m. UK time to release the mentorship lectures. I've had a few people asking me about that, but this one might be a bit later, so I do apologise. But anyway, I do hope you found this one insightful, and I will hopefully catch you again in next week's lesson. Take care, guys.
Episode 6.
All right, guys, welcome back.
We got
a happy Eid.
We got 3 more left. Wow. We're gonna do notes on this lecture 6. Honestly, yeah, I might just finish this series and then backtest some more concepts after that. Maybe backtest in between, but we'll see. This got called. Um, I want to be live for longer. I low key could just like have the stream just paused while I'm gone, and then come back to it later. Hmm. Yeah, because I don't want to end it and then like restart stream, or I could just end it and then just not be live later. Yeah, I'll probably just end it honestly if that's the thing. And then I'll be live tomorrow for another. I might record like some backtesting videos. That's what I might do. I might record. Yeah, yeah. I'll take time to record video. Yeah, that's probably what I'll do. Yeah, yeah, yeah. All right. Anyways, I'm gonna head out of here. It's been a nice stream. Little quick little five bomb. I'm gonna try to be well, I'm gonna be consistent with these, and I'm gonna do these every single day. I don't know. Yesterday was crazy. I don't know if I'll do like crazy every single day, but I think that I got plans to do one of those like every single week, and then low key like weekends we'll do long ones. But I think throughout the week, if I go live at like 5 a.m. to think about it, 5 a.m. to like what 12 or 6 p.m. my time, like at least like at least 10 hours every single day is I'll be live, and I'll just be doing this type of stuff. Anyways, I appreciate y'all.